Let's see. I think people are just tripping. I've got Louis Quick Cow Queen. I've got Denzel, and I've got Forex Delights. If you guys can just let me know what your trading experience is, if you can send it into the chat room, just right over here, I will more than appreciate it, so that I can know how I can tone down this class, and I'll be able to serve you in a much more sensible way. It's not gonna be like as if I'm talking to myself. So there's a little bit of a chat room where you can send where you are from into and your experience in trading world into as well. That would do me a great deal of favor in understanding you and in understanding how best I can present this session. All right. So if Denzel, Louis Queen, and Forex Delight can send a message into that chat room, it would be much more appreciated. Okay. Well, without further ado, if no one is sending anything, I guess I'm just gonna start. Hi Maya, thanks for joining in. So where are you from, Maya, and what is your trading experience? Will you be able to send that into the chat room, even if you can't, even if you cannot speak it out? It will do me a great deal of favor. Charlotte, North Carolina, wow, all the way in the United States. That's one of the reasons why I decided to do this session around this time, because I realized that quite a lot of people from the other side of the world are not getting access into some of the timings that we do our training. So it would do me a great deal of favor if they can get access as well. So what is your trading experience? Then, so how long have you been trading? Have you attended any of our sessions before? How long have you been trading? Okay, 4 months. Okay, brilliant. Edinburgh, in just a few months. Is that Edinburgh, United Kingdom? Is that in Scotland? Wow. Okay. Got some not far from Mumbai. Right. How are you doing, Scotland? I think yeah, the Scottish, they've got their own peculiar accent anyway, but that's brilliant. Thank you so much, Maya, for joining in. Yeah, so without further ado, today what I want to go across to you is how do you look at strategy? What are the components of a strategy? Okay, what are the components of a strategy is one of the key things that I wanted to go across. In every single strategy that you might be looking at or to use to start trading, they've got to have 4 components. Okay, is there any particular chart that you might want us to look into so that the class can be for you and not just for me, so that I can build our components around that pair? Is there any particular currency pair or commodities or any particular financial instrument you want us to look into? If there's any, don't hesitate to send it in so that I can just start from there. All right. While I'm waiting for that, let me see if I can get a clean chart. All right. So this is a clean chart, and it's a chart of Euro, New Zealand, gold. Right. Why does everybody like gold? All right. I'm gonna start with Euro ZAR. Eurozar. Wow. Okay, so gold was the first thing. So I'm gonna start with gold. Okay. One thing I want you to understand when it comes to gold is okay, I'm gonna try my best to use a gold chart that is clean so that all this analysis can begin from the onset. Okay, so I got a clean gold chart now, and first thing first is I want to look into monthly. All right. So in every strategy that you want to develop or that you're going to be using for trading, right? The first thing first, let's say strategy. Its strategy have to compose of four different elements, right? And it's referred to as STEM. Okay, in every strategy has to compose of four different elements and it's referred to as STEM. The S we start or the setup. Okay, what kind of setup are you going to be looking into? All right, so T is going to be a trigger. All right, what is going to be your trigger? The E is going to be your execution. How are you going to trade? Then the M is going to be management. Okay, how will you manage that trade after execution? All right, so a strategy has got a four different components. The first of the components is going to be your setup. What type of setup are you looking into? The second is you're gonna have to know what is gonna constitute your trigger. You're gonna have to know at what particular time is that trade matured and ready to be taken. Okay, and then you're gonna have to have a rule for execution, and then you're gonna have to have a means of managing that trade after you've executed it. Okay, all right. So can I ask, what sort of trading platform do you use? Are you using MetaTrader? Are you using trading view? What sort of trading platform do you use? Are you using CTrader? If you can send that into the chat room, then it can be a lot more. Trading view. Okay, so you just do your analysis on trading view. Okay, um is everybody on trading view as well? Is everyone on trading view as well? MetaTrader. Okay, so you are using MetaTrader. Well, let's see how best we can vote and see what we can do regarding this. I've got some strategy that are easily presented on the MetaTrader. I guess I'm gonna use MetaTrader to those strategies. I got some I can easily incorporate onto the trading view, and I'm gonna use trading view for that. All right, so without further ado, right, the first thing that we're looking into tonight is a chart of gold. Okay, and looking at the chart of gold, you will agree with me, we will be looking at what is clear, what is visible. Okay, and what is clear, what is visible is all about starting from a particular time frame called the monthly time frame. Okay, called the monthly time frame. All right, one second. So tonight is gonna be fired park. Tonight is gonna be very educational. Tonight, I really want to maintain not such of a big class. If you are just joining us tonight, and obviously your trading experience is quite important to me, where you are joining us from is quite important to me. Do not hesitate to put that into the chat room so that I can see how best I can tone down my training to meet your expectation. All right. So there's no need for me to go fully advanced if I've got a lot of newbie in the class tonight, right? there's no need for me to go so newbies if I've got a lot of advanced or experienced traders in the room. So I want to be able to moderate it. I want to be able to make it sensible, right? So if you can go into that chat room and let me know how long you've been trading, and then obviously what part of the world are you calling from. I want to see whether people from the United States, I want to see whether people from the Central America, I want to see whether people from South America will be able to benefit from this session. I realize that majority of my session is the people from the other side of the world, the continent, Europe, Africa, that usually benefit. So I'm trying to see how best to kind of serve some energy for people in other side of the world as well. So if you know that you are just joining me for the first time, if you know this is your first training with me, and whatever how long it's been taking you to trade, do not hesitate to pop down into the chat room. I'll more than appreciate it. All right, so in developing a strategy, I've given you the rules that it entails. Okay, every strategy have to begin with what is called STEM. The first of which is setup, the second is trigger, the third is execution, and M is management. All right, so a gentleman called Denzo want us to start with gold, so I'm looking into gold. All right, so what kind of setup am I gonna be using to trade gold is one key thing that I'm going to be looking at. All right, so the first thing first in my setup is going to involve what is called a monthly chart. All right, and this is a professional way of looking at the charts. To be deadly honest with you, over my last 12 years and 10-month experience in the foreign exchange market and the financial market globally, uh, to be deadly honest with you, I can only give you something that is highly professional. I can not give you a watered down version, because that's not the reason why I'm doing this. A lot of people that have joined in on my training before, they know that I deal with the facts. You know, they know that I can easily delve into any particular instrument and have a look at it and show you how best to trade. All right, so I want to look into strategy development. I want to look into a couple of strategies tonight, and I'm going to start with gold. All right, so like I said, you're going to have to start from your monthly chart, okay? And what you're looking for on a monthly chart is what is the real direction. What is the real direction? What is the real direction? All right, so my setup on the monthly chart now is going to be for me to look at that monthly chart and see what is going on. All right, can everybody see where we are on the monthly chart? Okay, so we can literally see that we've got this candle going down, we've seen this candle going down, we've seen this candle going down. But what is most significant that begins the turn, right, on this particular gold chart is this particular month right here. Okay, that is the driver, that is the beginning of the move, that is what starts to make this turn all the way down. Okay, so now you want to have in your setup what is going to be your reference point. What are you going to be looking at as your reference point? All right, so depends on the kind of trader that you want to be. You can be an aggressive trader and you can be a conservative trader. But at the same time, we all going to be looking at the same thing. Okay. So one of the strategy that I'm going to teach you tonight, okay, is going to be a strategy that is called the EMA strategy. All right. One of the strategy that I'm going to teach you tonight is going to be called the EMA strategy. Then I'm going to move on to another strategy. I'm going to move on to another strategy. So the setup that's involved in this particular strategy consists of 4 different types of EMA to start with. Okay, 4 different types of EMA to start with. All right, and then I'm gonna just unlock those EMA onto this chart. But before I do, looking at a plain chart, looking at this naked chart, I want to be able to find out how I'm going to trade this. All right. I want to know precisely what the direction is. So this month, which is the last 2 months, is what has become the driving force of this move that we are seeing in gold. Overall, if you've been selling gold, you'll make money more than buying gold. All right, that is what this move is telling us. All right, so what I'll do normally to develop my analysis, to start my setup, is to look at the last 4 months as well. So that this will be 1, 2, 3, 4. All right. So, and the premises behind looking at the last 4 months is telling me to look at the last 4 quarters. All right. In the banking world, in the investment banking world, we always measure our performance based on a quarter. Okay, we measured our performance based on a quarter. Right. So looking at the last 4 months is going to be showing me the performance of gold over the last 4 quarters. Can you see this last 4 months high, right? This particular candle here has got a particular high right here on this candle, and the high is saying, can anybody tell me what the high of this candle is saying? If you can say it out loud, it will be good. If you can't, can you just type it into the chat room? I want to make this session as interactive as possible. And obviously, if you can be part of it by giving me an answer to a question, will show me that I'm not the only one talking to myself. Will show me that there's a bit of understanding going on there. Will show me that you are following. All right. So if you don't know where to find the high, all right, if you look up here, you can see OHLC. That means the opening price, the high price, the low price, the closing price. All right. But all these values won't be relevant until I touch the particular candle that's involved. Okay. So the candle that we are talking about is this candle, right? So if you can tell me what is the high of that candle, then it will be making sense to you and I how this analysis is going to play out. So
1284.07.
1284.07. Okay, so who is giving me that details? All right, thank you so much, Olugbemiga. I, Jake, I, Kena, I, Olugbemiga, Toby, Olumide, Shagil, Forex Delight, Linda C. Marson, Louis Quakalquin, Maya, Van, Rome, and T Towns. All right. I'm welcoming you all to this session. I want to know where you're from. I want to know how long you've been trading. I do not need you to be silent so that you can benefit from this session. My own name is Bola Balogun, and I'm a 12 and a half years veteran in the financial market. Yeah, the session is recorded. I'll make sure you get access to the recording. Yeah, if you can let me know what sort of place you're from, if you can let me know how long your experience in the financial market, then it will give me the opportunity to know how best to take this session. This session is for you. I am so happy to be here to be part of this movement, and obviously, yeah, I will be more than happy to help you go forward. A lot of people know that I provide my training. A lot of people know that I provide funding for traders as well. A lot of people know that I back up traders as well. But at the same time, it's not just about backing up traders. It's about making sure that the traders that I back up know what they are looking for in the market and they can trade them professionally. So you can get a funding package from my proprietary trading firm as well. All right, so the high of this candle, someone says 131060. Okay, someone says 131060. And that is Forex Delight. Where did you get that number? Oh wow, interesting. Okay, if there's anything that you are not sure of, right, please don't hesitate to ask questions. I love answering questions. So for Forex Delight, I wouldn't know where you get that number from. You must have gotten it from somewhere as well. If you look at it again, as I'm pointing at it, you see that the I says 12H4.07. That's what the high says, okay? All right. So my setup in this case is going to be including looking at the last 4 months, all right? So looking at the last 4 months, the high of this particular candle is telling me 12H4.07, all right? And you'll be able to see where gold is going clearly by the time we finish this. All right, so what I'm going to do is I'm going to put an horizontal line on top of that eye. All right, I'm going to make the color to be a cyan horizontal line. I'm from Code Lake, Alberta, Canada, trading for under a year. Thank you. Kena, K, confused. All right, so do you want to tell me what you are confused about? How did you get across? Good questions. I mean, these are the kind of things that are key to me. If you don't know how I get those figures, what's the point in me doing the training? So I've said to you earlier, when I'm looking at a candle, right, I want you to look up at this data, right? That's for opening price, H for I, L for low, P for closing price, okay? But you're not going to give me any of this number until I point at that particular candle, all right? So when I point at the candle, then you can give me the number. So can you see the value of the I now? Can you see the value of the I now? T counts from the United States. I've been trading for 3 months. Great. I mean, this is fantastic. And thank you for joining in, everyone. The reason why I'm doing this session at this point in time is to be able to give you in that side of the world the same opportunity that the people in Europe, the people in other continents are benefiting, to be able to give you how the market is analyzed based on professional level, based on my own 12 years experience in the financial market, to be able to give you the opportunity for trading. But why that can do? All right. So if you are listening in, I've showed you that in the investment banking world, in the professional world, we look at what is called a quarter, right? We look at a quarter of an event. We look at a quarter of a year. We look at half a year. We look at 3/4, and then we look at a full year. All right. So we look at, when it comes to trading, looking at the last 4 months, 1, 2, 3, 4. All right. That is the quarter of all the trading, process that has been going on over the last 4 months. All right. So that's the reason, that's a quarter. But why that candle? This candle is a monthly, this is a monthly chart. This is the last 4 months of this monthly chart. All right. So this is a monthly chart. The last 4 months will be from this month of March to the month of February, to the month of January, and the month of December. All right. So this is my last 4 months. This is the last fourth quarter. All right. That's the reason why we are looking at this like that. We're looking at what has happened over the last quarter of a trading process, for us to be able to build a setup, for us to be able to build a trading strategy on this particular instrument, which is gold right here. Is that clear enough? Kena, I need everybody to be on the same page. I need every one of you to understand what I'm looking at. And then if that is clear enough, I'm going to move forward. If it's not clear, I'm still going to explain. All right. Okay. So, yeah, because I believe it's key for you to know what the bankers are looking at. I believe it's key for you to know what we are looking at in the investment world. Apart from being a retail trader, I'm following also different kind of trading indicators or trading style. So for you to know precisely what's going to drive this market. And what's going to drive this market will be something that the big money managers are looking at. So over the last quarter, all right, this is the high of the last quarter, all right. The last 4 months, this is the high of it, and the value is 1284.07. Okay. And then obviously this is now going to start to build up on your analysis. The low of that particular quarter will be down here as well. Okay. And then the next one is going to be the third month in that quarter. All right. This is the first month in the quarter. This is the second month in the quarter, counting forward. All right. So the second month in the quarter, what is the low of that area? Right. That is it right there. Do you can anyone give me the low of that particular month? Has anyone got an idea of what the low of this month is going to be, which is the second month into the quarter? Then you can start to see how this strategy is going to work out. Do you have answer to the low? So apart from looking at harmonics, apart from looking at also different kind of strategies that we have out there, I want you to be able to read into a chart and understand precisely what the chart is saying. So F7 for the low of this candle.
1276.50.
1276.50. Thank you so much, Jake. Thank you so much. Is that Olugbemiga as well?
Yes, please.
All right. Thank you so much for that answer. And as you can look at it, once you for all my newbies that's been using TradingView, right? If you look at it, this is your toolbox, okay? So if you click on this tool, this is a magnet tool, all right? And then if you've had this tool clicked and then you click your horizontal line, you can easily put the line on this candle without further ado. And you can see over here, as accurate as possible, 1276.50 is the low of that candle. The high of the previous candle is 1284. All right, so the next thing that I need right now is the high. All right, so I'll just put that on top of the high. Okay. All right, so simple markup, and I'll give you the basis behind this very shortly. All right, so the next one is the third month of this particular quarter as well. All right, so the low of this quarter is what? If someone can give me that very fast. What is
1302.45?
1302.45. That is the low of that candle, and then the high. If it's not clear, don't hesitate to ask a question. It's going to be that 1346.75. All right. So for Denzo, is Denzo still in the room? Right. And then we're going to look at the third. This is the first, the second, the third. We've seen the third. Now we're looking at the fourth month. All right. So my setup consists of looking at the quarterly, move in a monthly chart. All right, so that is number one key of my setup. So once I've got that on like that, right, what is most paramount to me is this. With this is each and every time when price, okay, each and every time when price is below any of this number here, is reinforcing your idea that is the sellers that are in control. You can see that when we have this high, all right, and then we have this particular month, we literally first of all went above this particular month high. Okay, we went above the high. All right. So while we were going above the high is the buyers that are in control. Okay, but the moment we close below the high, right, on this particular month, that literally changed all the buyers to giving the sellers a serious control. Okay, that gives the sellers a serious control. Just for us to close below the high of this month is the game changer on this particular month that started the rejection, right? In the business of the candlestick, the Japanese candlestick, there's a name for this particular candle, right? Does anybody know the name that this candle is referred to? And the reason why it's referred to that is because it's actually acting based on the resistance that we have all above here, all right? And as you can see, this particular candle managed to move all the way up, but unfortunately couldn't close above all this high. So looking at this high, this is high. This is a lower high compared to that. This is a much more lower high compared to all this. All right. So you can see how the weakness is literally coming down. All right. So if you are looking at your bias on gold and you are still thinking of buying gold, I want you to think twice when you are looking at your bias. You can see how this price is coming all the way down. In fact, by the time we get here, this looks so weak and it still looks considerably weak. So all the investment bankers are not looking at gold in a favorable manner. But now they have made a decision based on this candle. So if you are buying in any of this month, now you can see the reason why you may be getting burnt. All right. All right. So what I'm trying to show you is how to read deep into analysis. I hope it's making a little bit of a sense right about now. If it's not, kindly let me know. But if it's making sense, can you go into the chat room and just type yes, yes, yes into the trading. Right. So if it's making sense, just let me know. If it's not, don't hesitate to say no. All right. But if it's making sense, kindly let me know so that you can know how to look at your analysis going forward. All right. So I've got 2 people, 3 people out of 13 people who believe it's making sense. How about the rest of you? How about the rest of the 9 people in the room? 4? How about the rest of the people in the room? 4? Right, so I believe it's only 4 people that believes this makes sense. Let's see. Right, so I've got 1, 2, 3, 4, 5, 6. Right, so I believe now that we are 50% 7. Thank you so much, Linda. Thank you for contributing to this. I do appreciate it, and I believe by the time we leave this session today, a lot of you, we have something different, something positive, something that will open your eyes bright into the trading world to take on. All right. So having analyzed the monthly chart like that, you can see that your direction is down. All right. We've even closed below the high of the last quarter. All right. And closing below the high of the last quarter is very significant. That is opening us all the way down to the low of this quarter. But please do not say that I want you to now start taking gold all the way down to the low, because there are a couple of other things that we're going to be looking at as well to make this much more meaningful. All right. So to make this a sensible trading strategy, we have to look at the entire chart now. Okay, haven't done that, we have to look at the entire chart. You have to remember that your analysis have to take 90% of your trading time, while your trading execution should only take about 10%. Okay, should only take about 10%, so that when you are executing at the highest level of confidence. You are executing at a particular point in time whereby you know that you are doing the right thing. We will be looking at reference points. It's quite important to have reference points on the chart. That is what is going to literally shape your understanding and shape the kind of direction you're going to be looking into. All right, so there's another thing to look into on this monthly chart. It's called structure. All right, it's called structural points and significant points. So when you will now look backward, all right, you want to look at an area of structure on the chart. What do I mean by area of structure on the chart? That is that particular point on this chart that is holding the price higher. Remember, if you want to build something like a Trump Tower, if you want to build something like New York World Trade Center, if you want to build any structure that is going to be standing so high, you're going to have a foundation. All right, there's always a foundation to those particular structures. The same thing occur in price behavior as well. What we are looking at right now is what is called price behavior. There's a structure that's always in place. Look at this. Do you know that this is the highest point on this chart? Okay. But do you know that the decision to make this highest point on this chart did not start at this place? That decision starts from this area. And ask me why. If you look at it, when the price go all the way up, all right, this is the last low that you see right over here that literally take all this burden of the whole eye on top of it, right? You see this low here, can you see it? Right, so there is a structure right here. All the professional traders that took the trade around this particular location knows that this is a very good solid location. They know that this is a location whereby if they take the trades over there, they can literally have a massive result. And this is the beginning of the whole entire structure that we see in gold. That doesn't mean that this eye does not have its own structure here too. Can you see the low? This is the foundation of this eye, all right? And then the foundation of this eye, in fact, the foundation of this eye starts from here, all right? And then the foundation of this eye start from here, and the foundation of this entire eye start from here. All right, so the next foundation that we can see, we want to look at the one that is closer to price. So we have one right here, okay? So we're going to be looking at this number right here and see whether we've broken below this particular structural number, all right? As you can see, this is the time when we broke below that structural number, and that structure comes in at 1308.45, all right? So once you've broken a structure, it means, what that means is that you've literally approached, okay? You've literally approached a whole building, and then the next thing you are looking for is what is called capitulation. If you go and dig underneath a particular foundation of a skyscraper, all right, what's going to happen to that skyscraper is going to turn all the way down, okay? So that's the reason why you're going to be looking at capitulation. That's the reason why price is going to continue to move down. That's the reason why this area right here is going to be a key point, a key structural point on the chart. And just before I go away from that, so that's one structure. If you look at this month, you can see that we go back, right? Just before I tell you about that, if you look at this month, you can see that we go back to go and test that structural point. Why is it that that's the area that we went to go and test back? It's just for us to be able to confirm that price, are we now accepting that we want to go down? Okay. Is that making sense at the same time as well? Is it making sense? So this is more about analysis. This is more about analysis that's going to help you looking into other things that you are looking into, so that if you are buying into this market, you will have it at the back of your mind that you are only buying temporarily. All right. So you cannot shift the fundamental direction that has been turned around. Okay. But if you have price closing above these structural points right here, right, then you know that, okay, your dimension, or sorry, your direction is now going to be shifting in a positive direction to the upside. All right. But one thing I want you to understand is this: according to price structure, if we are looking at a structure, all right, so if I put this right here, okay, and the basis is this, if I put this right here as well, okay, and then if I put it this right here, so if these are structural levels, okay, if these are structural levels, all right, let me make it clear to you. If I come down here, and this is the way that you will be looking at your trading going forward, and I choose, let's assume price move all the way up, right, to this area, okay, because it's a structural point, there will be a mere pause, a little bit of a pause. Price can then do something like this, all right, and then because that structural area is going to be an area of resistance as well, all right. But the moment that we break it, okay, give me a second, let's do this again. All right, so we come all the way to this structural point, okay. The next thing is you can see a little bit of a struggle from that structural point because it's going to be acting as a resistance because price is coming from the bottom, all right, to that high is going to be um, finding a little bit of rejection or a strong rejection over there. But eventually, when we break through it, okay, so what we're going to be looking for is possibility to come and test it again, okay. So once we break through it, we're going to be looking for possibility to come and test it again to see whether we accept all the high prices that we've managed to create over here and see whether if we test it again, we are now more than happy to be like, okay, we've confirmed that particular structure and then price is ready to go higher. Okay. So let's assume price is not going higher and price did not get to the high of that particular structure. This one, price didn't get here and price come down like this. All right. And be like, okay, I'm not interested in going that further. I know that that area is existing, but I'm not going to be going there. And if we come back down to here as well, again, because this is a structure right here, okay, we're still going to respect it in a way, all right? This is still going to remain as a support, okay? Price can literally take it up from here again and go all the way down here. Or price can say, at this particular support, I can understand that you are there. I'm not more than happy to hold that support anymore, and I'm more than happy to take it down. Okay. So when I now take it down, in this case, the next thing I want to be sure of is, am I more than happy to go down? I'll come back to retest it. Okay. And that is what we've done on this particular month of April. We've gone back to go and retest that zone. Okay, not in an effort to carry on going up because we've managed to break it down. Yeah, it's in an effort to confirm that we respect the structure, and then from that particular structure, we are more than happy to start building lower prices towards the next structure as well. All right. So let's leave it at that. So what we've done is we've literally come down below this structure. All right. We've gone back to test it. A lot of people will be buying into coming down over here without knowing where to stop, and then there will be a lot of confusion in play and be like, oh wow, I forgot what's going up, and then look at what I've done. But because you're not paying attention to the structural points on the charts, look at it. When we come down below this structure, what did we do? We go back again to test it. All right, just because we didn't close above it, all right, because we've closed below it before, we went back to test it. All right, can you see how powerful this is now? Testing that particular structure is what brings down all these prices. Okay, so once we go below that structure, we go back to it to test it. Can you see this massive rejection? All right, so we rejected it. Okay, after rejecting it, we thought to ourselves that wow, there's a structure over there. Are we more than happy to go up or to continue to go down? We realize that, all right, we're not going to go down. The reason why we're not going to go down is this. Let me show you this. Can you see that when we rejected this structure and we came all the way down like this? All right, look at the lows right here, this low, and look at this low right here, right? We literally trade below those two lows, all right, but we close above those two lows as well. All right, we traded on a minute scale, you'll be able to see this much more better. But because I am a applied financial market trader, that's what I actually study. I can see it, but following me will give you the opportunity to look at it. Why did you look at immediate left to find the structure, but all the way back to the left? All right, good questions. Okay, so The reason why we look at the immediate left is there's nothing to look at on the immediate right because we haven't built any structure on the immediate right, first of all right? And at the same time, the key structure over here is that is so relevant is the structure that generates the historical high price in gold. That is relevant to us, okay? The historical high price in gold, this particular structure is relevant more than any other structure. But now, you see, every single thing that's happening over here is we are in a, what we can call a ranging or a bracketed or a consolidated market condition. We haven't generated a new high since this particular high, okay? We haven't generated anything that looks significant with all these data over here, all right? This is the data. This is a particular data point that generated a new high for us. So that is important, number one. Other data points too are important. They will now turn to a significant point, all right? So we have a structural point. We have what is called a significant point. A significant point are going to be all those other parts of the charts, all right? That's when the price comes back into, all right, and then they find massive rejection. Look at it. When price comes down to this area, we do not create a new high above this high, all right? So we do not create, this does not start as a new structure for us, but this is significant in the sense that we come back down to this area and then we saw a massive rejection of about 1, 2, 3, 4 months, okay? So look at here now, all right? So we came all the way down to here, all right? So over here at the top, this is another structure for a new move down low, okay? This is another structure for a new, if you turn this upside down onto the flip side of the, what's it called, of the chart, this can look the same way as this look, all right? Because this structure over here created a move down, all right? Meanwhile, although it's facing south, it's more or less like, if you look at it like I said, it's facing north, this will be a structural point as well. Does that make sense at all? Okay, now, so looking at the left, we give you what the historical price has been resting on before, all right? Looking at the right is the future prices that we haven't actually seen. Is that clear at all? And then the other areas that you might be seeing on this charts, they will now become a significant point, all right? Because they do not create a new high price or they do not create a new low price, so they can be a structural point. They can be a structural point because they are not serving as a foundation to that particular price level. Is that making sense? If you look at here, because we have a very high zone here right now, yeah, this is the structural points that created this high, okay? So structural points are very important. They will create a new high for you, okay? Look at it. So this area now did not create a new high, but this area is an area of significant points, all right? This is an area of significant point because we have a massive rejection over here. So if this price is going all the way down, right? And then this price is coming all the way down, breaking this low, breaking this low, breaking this low, for example, and then we created a new low, this will become a new structural point up there. You can see price has gone past the level you have drawn, the line. Why not a structural point where price is now gotten to? I don't know if you can rephrase that question, Kina. You can see price has gone past the level you have drawn, the line. Why not a structure where price is not going to? Yeah, of course. Now that is where you are now having the right idea onto looking at what is the next structural point. All right. So you need the next structural point on this chart, and the next structural point for me on this chart will be this area here. So you'll be considering the next structural point right here. That's a good point, and this is going to be our next structural point, 1157, and this is how you build your target projection going forward. All right, so this is going to be another one, but at the same time, you can have another significant point on the chart where you have a huge massive reversal. So the next one that we are seeing on this particular chart that is significant to me, all right, not a structural point. In this case, although if we are considering this on a very minute time frame, this is going to be a significant point. This can be a structural point for this particular eye as well. But yeah, overall, it's a significant point. Okay, overall, it's a significant point. All right, so what I'm going to do to this right now is I want to change the color to maintain it as a monthly chart. Okay, I want to change the I don't want my chart to be so messy up. All right, I'm going to change this line to be this so that I can know that this is at least a structural point, and I'll show you how best you can use this as well. So over here, we believe this is a significant point. It can be a structural point for this eye that is created because this eye is literally higher than here. All right, so what did I answer your question, Kina? Did I answer your question? Let me know if I answer your question. Let me see who is here. So over here to this morning, I've got Abdullah Al Mufle. Where are you from, Abdullah, and what's your trading experience? No, I don't like this sort of kind of the answer. All right. I want you to have a clear understanding so that tomorrow when you are teaching this, you are teaching it in the right way. So please rephrase whatever is not clear. All right. And then obviously I'll be able to see how best I can look into it. So I've got Fran, I've got ITS Linda, I've got Jakes, Joshua, Kena, Linda C. Macon, Luis Kuikali, Queen Maya, Nishad, is that my Nishad, Olugbemiga, Fiaron Van, Rome, T. Counts, Thomas Meya, Tobi Olumide. All right. So tonight we're looking into what is called strategy development, and then we're looking at 4 key points that comes into developing a strategy. All right. So although I'm sort of new to this, right? Interesting. Well, you will be able to follow the recorded video on my YouTube channel going forward. Don't worry, Abdullah. But it's fine. You will get an idea or you will get a clue into what we are doing going forward. All right. So, like I said, the price that created the highest point on the chart, you can agree with me historically, this is where we have the highest price in gold. The structure, which is going to be the foundation of that particular highest point, highest price in gold, is down here at 1308.45. So that number is significant. That's the reason why when we break it the first time, we went back again to test that particular zone. All right. So going forward now, again, we have another structure or significant point. 1 second. I don't want the chart to be messy up. I'm still going to clean up this chart anyway, and you'll be able to see where we're going. So my key points, as you are following me in analyzing gold, you can see we have a structure over here. This is another structure over here. All right. So going forward, another significant area for me will be this low, and that will be my next target in this going forward in gold. All right. So I'll be looking for gold to come all the way down to what is the low of this price? 1236.66. All right. It's right over here. That's where I'll be looking for gold to come to. Let me see if I can make it bold. 1 second. Okay. So that we can know that that's our next target that we are looking at in gold. That is the area where we're going to be looking for price to either come to just like this. All right. And all the investment banking world are looking at that number as secretly as possible. They are eyeing it considerably. They know that the moment gold gets to that area, well, they've met a particular target, and then obviously they will be looking to either take some profit off the table or shift their bias or wait a little bit for them to see whether they want to short again. So this is my next immediate target. All right. And then just as you ask the question, you look to the left, the highest point gold had been and found a structural point closer to that. Now, why is your next structural point randomly picked that is not on the wave that formed the highest point? Right. I mentioned two things. Okay, I think this is where you are missing it. All right. So I've mentioned structural points. Okay. I guess just because we haven't put a definition to it, that's the reason why you are missing it. Okay. Structural points. So let me put it like this to make it reference point, reference point. If you do not have a reference point on any trading chart, structural points, right? And then I've mentioned significant points. Okay. So these are reference points. Okay, these are points that you make a reference to when you are trading. What you want to use this point for is more or less like a pivot points. You want to use them if price is above this particular reference point, right? Then I know for a fact that price is looking bullish. If price is below it, then I know for a fact that price is looking bearish. All right, so this is what I'm saying. I said to you earlier on that if this is our structural point, all right, let's assume this is all our structural points. If price is coming to that structural point, it can find a rejection on the structural point. It does not usually blow through that structural point like that, especially if that is the first time. And then obviously there will, it will respect that structural point and then bounce a little bit in case price really want to go up, and then literally go above it and come back to retest it. Okay, so that is what structural points does. When price fails to go above it over here, traders are going to be looking for possibility of selling, right? And they're going to be looking to sell to a particular point as well. That discussion, we're going to have it as we go forward. And obviously, if traders now decide to take price above the structural points now, right? This does not necessarily mean that this will happen in a day. This does not necessarily mean that it will happen in 2 days. It can take a couple of days before it happens, right? But eventually, if we broke through that, if we manage to break through the particular structural points, all right, what we tend to see is traders would now accept that area as being confirmed, and they will be looking for more further higher prices, such that when you are looking at retracement, all right, the next thing that you're going to be seeing is when price is coming down, it will use that area of structural point as well as a pivotal zone for it to make a decision to go up. Look at it over here again. When price comes back to that structural point, all right, it bounces a little bit and then price will go down. Yeah, say for example, price really want to go down and use the structural point area as well to confirm this move all the way down. And I've cited so many different examples around that structural point again. So what I'm going to do is let me change the color of this so that we can say we have a particular color to structural points, and then we can understand that that's a structural point. For the sake of this illustration, let's make it black in this case. All right, for the sake of, I love to make it cyan so that I can understand, but for the sake of this illustration, let's make it black. All right, so you now ask a question that why did I randomly pick? Now, why is your next structural points randomly picked? That is not on the wave that formed the highest point on the gold. All right. So that is the question that I wanted to answer you now, right? Every single point on this chart is important. All right. The reason why it's important is at this low that you will refer to as weak, all right? One particular trader, right? It does not have to be one single trader, right? So when I say, yeah, we will review it, but this is an in-depth class. It might take some time before we get there, but yeah, I'll try my best to review it for you. So what I'm trying to say to you is that a particular trader, right? It doesn't have to be one single trader. It can be a collection of traders. It can be a particular big hedge funds, can be a particular big investment bank, or couple of banks are buying at this particular low. That's why we have this strong rejection. All right. And the moment they pump their money into this rejection, they buy off every single order. There's no more any order that can come down to this low. All right. They buy off every single selling order that's coming down. Even we can see it over here that nobody has got any price to sell over here. They clear it off completely. And that is the reason why when price tends to go down, it couldn't go down below anymore, because there's no any price to offer around that particular zone that is enough to be able to bring price down, and then price shoots up. All right. So what I'm trying to bring to your attention is each and every price that you see, even at the lowest point of this particular, they are very important, because they are turning points for price to start to make a new decision. All right. So what I'm trying to say to you in essence is I've shown you how structure is calculated, or how we find structure on the chart. Now I'm showing you what a significant point is. All right. So let's put a little bit of definition to it. Structural points. Right. So structural points is that point on the chart. Sorry. You can add it up on, and then you can follow me. Is that point on the chart that on the basis, or the basis of either basis or the foundation. Sorry, I want to use basis yeah, I know, or the foundation. It's good if you can say clearly of either a new eye. I've always stitched this. It's just because you haven't watched all of the video on my YouTube channel, of either a new eye or a new low. It's the same. You can see this on a 5-minute chart as well. It's the same. You can see it on a 1-hour chart as well. But when you're looking at it from an investment bank point of view, you're going to be looking at it from a monthly chart. All right. And that gives you a much more powerful edge in the market than any other thing. And if you follow this, you'll be able to see a lot of difference is going to be made in your trading um, results. Foundation of either a new high or a new low. Yeah, on a particular financial. So significant points, however, all right, so let's do this. The form, let me do this like this. Right, financial instrument. Okay, all right. So structural points. I'm sorry, I'm using my mouse right. Right. So significant points, however, right? They are more or less like structural points, but those are the areas where you have on the charts this is the point where price under a huge point. Okay? So if you're following my definition, Kina and every other ones that are in this room, if you're following my definition of significant points or what I look at as reference point, let me bring this down. I hope it's not too small. You then realize that, like I said, this area, when price got to this area is a significant point because this price is coming all the way down before, but we encounter a huge turn that send us to a new high. And to be honest with you, this is what I'm saying to you, that if you can look at this from this point of view, if this is the only area that you are looking at on gold, all right, and then you are not interested in every other thing that's happened over here, the structure, the structural points that created a new high over here will have started from here, if you can agree with me. Okay, it would have started from here because this gives us a new high compared to this high over here. But if we're looking at it in the overall picture, this will be a significant point. Okay, this will be a significant point rather than a structural point if we are looking at it on the entire picture of the chart. Okay, so over here, down here as well, we're going to be having what is called a significant point. All right. Meanwhile, just right below it, we have a structural point. All right. Does that make any sense at all? Kina, if you have any other question, do not hesitate to ask. So moving forward quickly, if you have questions, all right. I'm glad that your kind of yes now is out. Thank you so much, Linda. Right. How about others? Does it make any sense at all? I'm having have a definition to it. All right. So where do you encounter a huge turn on the in the market? All right. When you look at here again, this can be an area where the huge turn starts from. All right. Thank you. Thank you so much, ladies and gentlemen. Thank you, ITS Linda. I'm glad that you are now following and you can get it. All right. So this is looking at a chart from an investment bank point of view, and this is huge for all those money managers. This is huge for all those fund managers. In fact, when you look at it, all right, what can you see over here? Can you see this point here? And these are, yeah, they are historical prices. You can be thinking, do they matter or they do not matter? They only matter as a reference point for you to have them as an area where you can say that the moment price is above this point, I'm going to be a buyer, but there are other things that joins to it. Okay, I believe we'll be able to delve into that as well. So when you look at this, what is the eye of this candle right here? Let's make it clearer. What's the eye of this candle right here? Can anybody give me the eye of this candle? I can see it. I just want someone to confirm it as well so that I know that we are going in the same direction.
1226.30.
All right, 1226.30. Okay, so let's assume that zone as well. That's another good area of structure for us. All right. So we're gonna this is gonna be a significant point for us because this does not create a new low. So this is a significant point for us. That's an area where price get to suffer the massive huge turn. All right, so now we are building what kind of targets that we are looking for in gold going forward. All right, we are building what kind of target that we are looking at in gold going forward. All right, so now I believe with all these numbers, right? with the first target at this area 1236, and the second one, right, at this area of 1226. I believe I have the huge targets that I needed in gold. I believe going forward, I believe I know where gold is now going, right? All the way that is pointing down from this particular spinning top that we're seeing on this chart. And then this is a huge, massive candlestick signal, especially once you see a candlestick signal on the monthly chart, okay? Once you see a candlestick signal on the monthly chart, look at that. That's a doji on the monthly chart. It can set a tone for that thousands of pips that you're looking for. All right. Once you see it, then it can start to set a tone for that thousands of pips. So remember, in a month, we've got about 21 trading days. All right. So that 21 trading days, you will encounter the days that price will go widely up, and you will encounter the days that price will now continue to follow the tone. All right. But once you have your monthly chart as key directional bias, all right, all you have to do is just follow what the monthly chart does. So the moment that you're seeing price going all the way up, you will just sit down at the back of your computer smiling and be like, now I'm getting an extra discount into this opportunity. All right. Probably you've missed it, right? But you've seen your monthly giving you that doji-like candle. You've seen this gravestone doji at an area of resistance, all right? Then that is the beginning of lower prices. Look at this again, all right? So this is the beginning of lower prices, and price has not get to where it's going to stop. So this is why I'm now saying that in the day time frame, in the hourly time frame, you can see price retracing all the way back up. You don't have a reason to panic once you have all these areas intact like this. All right, because what you are looking for is, if price is going up, where is my reference point? My reference point for me to know that this has done and this is going up continuously, and this is not going to look back, is going to be until when we look at 130845. All right, so with this kind of analysis, you can build your Elliott wave, you can build your wave theory on top of it, and then your wave theory will now be as strong as possible, and you will see it going forward. So I've done the monthly charts. This is significant for me. I can see where price is going. To be honest with you, I can look at a weekly chart so briefly, very quick, okay? And one thing I want you to look at is, look at that weekly chart. Why do we have that massive rejection, all right, on that hour zone? Do you think it's a coincidence that every single thing that comes down here was completely rejected, all right, and then forms this particular doji? And some people will still be thinking, well, we went all the way up, it's now giving us lower prices, it's time for us to load the buy. Why do we have this rejection in this zone? Is this something for you to ponder on? Why do we come back after we break it? Why do we come back to it? All right. And even when we come back to it at the first time, we manage to find rejection there. Traders try to push up again, right? Not believing themselves, try to push up again, and then we still come all the way back down to it. All right. And the moment we close significantly below it now, we went back to it to go and test it. Has this area been a pivotal point on the chart or not? You can see, look at all over here. All right. And these are historical numbers from way long time ago, immemorials. All right. And it's still being respected on the chart. All right. So now this week, what we are seeing is we've traded all the way down. Now we are even closing down below a couple of 2 months low. You can see the price. You can see that price is closing down below this month's low, that month's low, that month low. So looking at this price, is this price looking positive to you when the minor monthly highs and low areas are now being underneath this particular price? Remember, we've closed below the lows of all these areas, right? Is this price looking positive to you that things can go up, or is looking negative to you that things can go down. Can somebody give me a clue from here? What do you think gold is gonna how do you think gold is going to be looking going forward? Based on what has been taught, what are you thinking about in gold? Big negative, a big momentum candle, right? Okay, but based on certain figures, based on certain numbers, based on 1284.07, based on 1281.01, based on 1276.50, all right, are we closing above 1276.50 or we are closing below 1276.50? So you need to have a reference point on your charts. All right. You see a big momentum candle. It can be a big momentum candle. All right. But depends on where it closes. All right. Let me go back to this on monthly quickly. Okay. All right. So look at it. Is this a big momentum candle as well? Is this a big momentum candle as well?
Yes.
All right. So this is a big momentum candle. But look at the last 2 months, this month and this month. Can you see them? Right, so
Yes.
what I'm going to do now is this. I want to show you something. Look at the low of this month. I'm going to change this color to red, okay, so that we can go and follow it. I'm going to make it a little bit thicker so that we can go and follow it. I want to demonstrate something clearly to you. And then I'm going to put this as red as well. All right, so these are the last 2 months before this particular red candle. And on this candle, what I'm going to do, in fact, is I'm going to put, does it matter so far away, 2 years ago? Well, how long do you think JP Morgan has been existing? Have they been existing 2 years ago? How long do you think Goldman Sachs has been existing? How long do you think Chase Bank has been existing? How long do you think Rockefeller, Rothschild, the FOMC, the Central Bank of England, how long do you think they've been existing? These people have been buying into the market before they open the retail space down to us. They've got all these numbers going on their book, and they know where they want to cover their own trades. All right. So just because they've opened this trading institution down to the retail traders over the last just a little bit over 20 years, since the early 1990s, right, does not mean that this has not been traded from way back then. All right. So when you are looking at this, you have to understand who your market participant is. All right. And all of them have been buying into this. They've been making, they've been building their position onto this. But just because you've never had this open to you from an investment point of view before, and then the only thing that you've seen is a majority of the people that will be trading based on indicators or trading based on one particular stock, does not mean that these people do not have their books that they are following. Does not mean that they don't have a specific price that they will go inside the market to go and buy. UBS can go inside the market and they have their key levels that they are defending. Most probably, if UBS are the ones that are buying from here, obviously, when they start to buy from here and they've sent price all the way down here, by the time price is coming down back here, probably they've been taking their own profit on this particular zone, knowing fully well that we are here. When price is coming back down here again, they are thinking of buying. That's the reason why you hear that traders do the same thing over and over again, because they know that this is the price that they will buy that will balance their portfolio all over again, right? So they want to come back into the market to buy that level again. They want to come back to the market and do the same thing again. Goldman Sachs have their own level. Every bank, city have their own level that they bought. Some bank, some hedge funds, some government institutions, some central banks are bought from here. All right, they dry up, they bought every single sell orders that's coming. They don't care whoever is owning it. Remember, the money is not even the £1,000 that we are trading with. All right, they've got significant amounts of money. When you're looking at my own fund, my proprietary trading firm, the amount of assets that we have on our balance sheet, it's huge, and it's significantly huge. And when you're looking at that, until you become part of the company, you won't really understand. When you're looking at that, you would know that these people can buy anything that they want to buy. There's no doubt about it. They would dry up the whole of the orders in the market. The markets, the other participants will be trying to push price, but there's nobody that will give you that particular price. Say, for example, now, let's assume I buy a building or I buy a particular, how do I put it so that you can understand? The whole of the orders that's in the market, imagine someone has bought it, take control of it. That's the right word I wanted to use. Someone has taken control of it, all right? So that there's no any orders that's coming into that market that is not going to be coming through them. You know what I mean? They suffered the move. They suffered every single move that's come. As this is coming down, they are just loading up and buy. As this is coming down, they are just loading up and buy. And someone we have more of those orders more than every other person is. That's the reason why when price is falling, it doesn't mean that people are not buying into it. People are buying into it. But it will get to a particular point in time that if you are buying into this strong trend, you don't have enough cash to buy into it anymore. If you're buying into all this strong trend, you don't. So when there's no anyone that's willing to buy, that's willing to sell anymore, as you are selling into this, some people are acquiring it. As you are selling, a lot of huge hedge funds are acquiring it. As you're selling, they are acquiring it. When it gets to a point in time whereby there's nothing for you to sell anymore, all right, they have owned that position. Now it's their own time to play. All right, so there's nothing for you to sell anymore. The whole position has dried up, nothing to sell, no one is willing to sell. Then the people who are now holding on to it will be holding it because they know that now there's going to be demand for it. And that's the reason why demand and supply works. So now that there's demand for it, now that demand has been created for it, price will now start to go up. They will now continue to be in control. The only thing that you as a retail trader want to be is you want to hide behind them. Okay? You cannot predict the price. Forget about it. You want to hide behind them so that when you see them making their move, you are just following that move. Okay, you don't want to force anything. When you see them making their move down, you just want to follow their move. All right, and when you look at this move down, all right, when you look at the way that this price is moving down, you can see that you cannot see the strength as much as you can see it even over here. All right, it's just moving down gradually. They are not literally selling off in a significant manner or in a manner that's going to turn the market way into serious crisis. They are selling off gradually for them to look for where all these sellers are going to end up and then buy it back up again. So the business of trading, it's all about the orders that's coming into the market. And what you want to do as a retail trader is hide behind those orders, all right? Or hide before it. So now we want to hide before it by noting these two locations. So that such that when price comes down to it, that will be the time whereby we'll be looking forward to do what? To be picking up some buy orders based on certain reactions that we see on a rejected candlestick. All right, there's what we call rejection, there's what we call acceptance. If price comes down to here, we're looking for rejection for us to buy. If we do not see rejection, there's what we call time frame analysis. All right, there's what we call time price opportunity. So in this particular area is where we're going to be looking at time, we're going to be looking at the price, we're going to be looking at the opportunity that price is presenting in this particular area. So if we have not started to sell, all right, this is the next place that we'll just be waiting on and be like, let's see what the time, let's see what the price, and let's see what kind of opportunity the time and the price will present to us in this area. If the opportunity is still going to be negative, the only thing that we can do is continue to sell. All right. But what I wanted to show you before diverging Is this market in monthly consolidation? As you can see clearly, it's in monthly consolidation. It's clearly in monthly consolidation. So where this is where we are before we diverted a little bit. I wanted to show you something that I saw on weekly, and I want to show you that on a monthly chart. That look at this month low, look at this month low, all right, and then look at this particular month low. So what I'm trying to say to you in essence is on this particular month low, we literally traded below this 2 months low, all right, and then we come down to this low. But fortunately, in a way, when we are about to close this month, okay, we close well above this 2 months low, all right. So despite the fact that this candle is negative, right, when you are watching the market from a quarterly point of view, month to month, this is in fact positive just because we close above this 2 months low. All right, and that is why I wanted to demonstrate to you on a month, on a weekly and daily chart, so that you can understand what this is all about. So what we're going to do to demonstrate that is we're going to look at this month. So this is the month of May 2016. Wow, we have a long way to go. Let's see whether we can find it. All right, so May 2016, let's look for it on weekly and see how that play up. All right, so this is May 2016. Okay, so what happened on this week is this. Look at how price was coming down. All right, when price starts to come down, I want to go back to monthly for you to see what I'm saying precisely again, so that you please do follow this, all right, because I'm not going to repeat it again. All right, so we have this particular month that was so negative in May 2016, right? You can see the date, okay? That's the reason why I put this horizontal line there. But look at what follows it. So I'm now saying to you that based on what happened over the last 2 months and close above the last 2 months, that is positive, and that is the reason why price starts to move up. So if we're going to demonstrate it, so this is exactly what I'm saying. So this is where we encounter that low. You can see that that particular month's low was this one, all right? But we managed to close, right? We managed to close above the lows of these last 2 months. You can see that I put this horizontal line there for us to have a reference point. So when we close above it, can you even see the kind of close that we got on weekly? We've got a very bullish engulfing close candle above it, all right? But this particular bullish engulfing candle close above it is the one that set the tone for these high prices. So on monthly, just because we close above the last 2 months high alone, all right? Just because, and this is where we close above the last 2 months low. Sorry, just because we close above the last 2 months low, let me take you back. You can, if you have questions, don't hesitate to ask. I'll just take you back to it. All right, so my internet, come on, internet. All right. All right, so let me expand this a little bit up for you. All right, so we have this low and then we have this low as well. All right, then we have this particular month that went below and give us this low. If you remember this, let me change this color so that we can know where this is from. Let's change this color to something purple so that we can always see it. And this is the low that we are referring to that managed to close above these last 2 months. Okay, so if we go to weekly now, right? So this is the low that we are talking about. For the mere fact that we close above these 2 monthly lows, and you can see the way that we even close, we close bullishly above it, all right? On weekly, it's much more clearer than on monthly, and that is what begins the high prices. So the close that is so positive, even if the candles, even if the sell-off is so steep and it's so negative all the way down, but for the mere fact that we close above the 2 months low as a reference point, all right, that is the beginning of a positive move, and you can see it as an indication on this weekly chart. Okay, So if that is clear enough, I want to move quickly into the other part of the strategy development. I know this is new to so many people, and that's the reason why I decide to take my time to teach it. I don't want to rush into it. If you are still following me, what I'm trying to say to you in essence now is this. If you remember how we managed to get this, our low points, now that we've closed negatively above it, sorry, below it. All right. So is this all right. So now that we've closed negatively below it, the everything that is going on in gold now is looking negative. If we have a close above this 1276.50 now as a reference point, that will be the beginning of looking positive a little bit again in gold. And then that close positive above 1276 can literally take price up to another 1281, can take it up to 1284. In some cases, maybe 1302 or 1302 and 1308 back. But in as much as we are closing below it, what you're going to be watching for closely is you don't want to see a close, a strong close, either on a 4-hour chart above 1276.50. Okay, and this is how you switch your bias left, right, and center in the market, so that in case you don't want to get lost on this map, right? You don't want to get lost on this map. If you have a bullish close on a 4-hour chart above 1276.50, then you are thinking, okay, all right, we might be going positive for some time. We know that the structure is still above 1308 or around 1308. I can be a buyer, and I'm only going to be a short-term buyer of gold. Okay, I'm only going to be a short-term buyer of gold. I'm going to follow the price up slightly the way that it's going. I'm not going to put a massive buy position on gold right now, just because we closed below the monthly charts. All right, one of the last 4-month charts low. All right, is that clear enough? Is that clear? Because I want to move forward now and then
Yes.
delve into the other part of the training. All right, so my own setup for this. Thank you, Nishad. Um, Let me bring our thank you T counts, and thank you for taking your time to go through the boring process. I just want to make trading easy and clearer for people. At the same time, I want to make it fun and interesting for you. All right. And if you ever have any reason to need any trading funds, we have an opportunity that we are presenting to traders to back them up with institutional funds as well, so that you don't have to continue to be looking for trading capital. Provided you've got a strategy that works for you, I can make sure that you get capital to trade, starting from about $10,000 upward to about $50,000. There are certain risk parameters that is attached to it, but the good thing about it is this: once you make 10% on that $10,000, we will double that to $20,000 for you. Which means if you make $1,000 on the 10,000, we will give you $20,000. All right. And then we're going to be on a 50-50 monthly payments. What tends to happen is you make 1,000, you get $500 paid to you directly as your profit. The rest of the 500, we're gonna put it on the 20,000 for you, for your account to be 20,000. You make at least 10% of that 20,000, that will give you $2,000. We're gonna double that account to 40,000 for you. You will get paid $1,000, and then if you make another 10% on the $40,000 or 10% plus, you're going to get half of whatever profits that you make on that $40,000. The rest of the half will be contributed towards an $80,000 account. And if you are following my trading process, if you can understand the way to trade, if you can see things clearly, to be deadly honest with you, I can get this up to you for up to the tune of 320,000. The maximum that I funded is about 1.2 M. I will give you details about that going forward. Anyway, let's look at this monthly chart from an And let's take it down to the weekly. Okay, so this is the weekly now. The weekly is looking negative. You can see that we've even closed below the last 2 weeks low as well. All right, the last 3 weeks, the last 4 weeks low, 1, 2, 3, 4. So the new week now, that's what we're going to be looking at. And we're not going to be looking at this new week as favorable as possible at all. We're going to be looking at this new week knowing fully well that we've closed so negative. We've closed below all the 4 months low, and then we want that new week to be as bearish as possible. A lot of traders will be selling into gold coming into the new week, and then you can ask me how I know. So coming into the new week, this is how I'm going to trade. I'm not going to be buying the first buy that comes in into gold. None at all. I don't need that. I don't want that. That is a fake out. Okay. That is a fake out. The first buy is going to be a fake out. And what do I mean by the first buy? So the market opens and then you see this huge rush into gold and some people are buying it. No, that is a fake out. You should know the reason why it's a fake out. Does everybody know the reason why that is going to be a fake out? Because I mean, teaching this is so nice when you are hearing it from me. When we make it interactive, that shows me that you are having an understanding. When you get fun to trade, I know what I'll be watching for. I know if you're doing something. I can easily see if you're doing something right or not. But imagine when the market opens, this is so negative, and then the first thing as a professional trader is you want to buy into this. You know that that buying is to lure you in so that he can sell it back. Everything is clear on this chart, has shown you clearly that this is going down. They want to push this down. The first buy is not sensible at all. Is the first buy sensible? Please, I just need an answer to, if you are
No,
following me, is the first buy
no,
into gold sensible at all?
no, it's not. It's
It's not
bearish.
sensible.
No,
All right. So what you're waiting for is if you see a first buy into gold. No, thank you, Jake. Thank you, T counts. You know, I've got 3 people short term, maybe. Well, you can be playing with your phone. And then when this rush comes in, seriously, when this rush comes in, you'll be thinking of where am I going to get out? That's a problem. You won't have a clear understanding of where to get out. It's not about following all the prices that occurs on the chart. It's about following which particular price that is going in the right direction. Remember, I said to you as a trader, what you want to do, what you really want to do is you want to get behind the price, okay? Or get ahead of the price. If you're going to get behind the price, this is the price that you are getting behind. You are not the one forming direction. Don't let your emotion trick you. All right. Do not give a chance to emotion to trick you. All right. So this is glaring that this is the direction that you are queuing behind. All right. So when you see that buy coming in, all right, if you're thinking about it as a short-term buy, well, nobody's going to say that do not take it as a short-term buy, but the first buy into gold, it's going to be very, very suicidal, all right? Because you will actually see the price going up if it happens, all right? And then that first buy will be short-lived, okay? That first buy can even be a serious fake out, all right? So you don't want to buy the first buy. And what do I mean by the first buy? All right, let me explain it to you in a much more clear form so that you can understand, so that you're not going to even be thinking about it in a short time, so that you're going to be looking. All right, so we opened, all right, and then price goes up even here like this, okay? Price has not given you, sorry, let me delete that. All right, so we've seen that the weekly too is negative, all right? I'm going to move into, let's move into 4 hour quickly, then I'll come back, all right? Right, so this is a 4 hour chart, please bear with me. So what I'm going to be looking on this 4 hour chart is what I'm explaining to you that say we open, okay, if I see price going up like this, which is my first buy, right, and it's even going up stronger, okay, I'm not going to be buying that, all right. I want to see price coming down, right, and then finding a failure, all right, around my point, and then that failure is what I want to buy in case I need to buy, all right. I want to see the failure to go down and take out this low. All right, and that is why I want to buy. So do you buy when it breaks the trend line? All right, 1 second. Do you know that this is not a trend line? Please bear with me a second. Let me take you back to it. So this is not a trend line. I'm going to take it off, right? If we're going to build a trend line, we're now going to start to build a trend line, all right? So if we're going to build a trend line now, one thing I want you to look at is this. Look at this price, okay? You can see the way price is going up, okay? This is cool. You've understand the reason why we are selling this right now, because even this price did not even touch this trend line. This is weakness, all right? We can see gold is very weak, okay? This entire move that goes up is a weak move. Okay, this particular weak move can find another strong point on the price going forward. I'll show you. Most probably this can be very, very intuitive to you. Let's look into a daily chart quickly. So on your daily chart, what do you want to? So the setup, you can see that my setup is going to be those monthly um numbers that we found. All right, so my trigger now, I'm still gonna show you how I'm gonna find my trigger. All right, so if I look into this, if I come to this arrow tool and I pick this, okay, look at what I'm gonna build into gold going forward now. All right, can you see that? So I'm building a channel into gold, okay, and this particular channel, I taking this channel on the daily charts, okay. My daily charts, I always like it to be blue, all right, so that I know that this is blue, so that I know that I'm taking that channel for a daily chart. When I'm looking at it on my chart, I know it's not a weekly channel. So when I see the blue, I know that all this area constitutes to a daily channel. Okay. What tends to happen is we broke above this channel and then we come back to test it. We start to move up. We come back into it. We broke back above it. We broke back into it. We test the eye again. So you can see that this area of resistance here, all right, corresponding to our structural point, okay. Can you see how this area is now becoming powerful for price to start to sell from? Okay, is that clear at all? When I put in this channel, just before I put in this channel, we don't have an extra confirmation.
Why is that? Is it because
Question? Sorry, I missed that question. Can you please repeat the question? Sorry, I missed it. All right. If sorry, I wouldn't even know who asked that question, but whoever do, if you're having connectivity issue, you can send it into the chat room so that we can treat it. I heard why is that? Why is that? I definitely hear why is that. And I believe some other people hear that, but I didn't get the full part of the question. All right. So going forward, I'm going to employ a channel trend line, okay, to have a view, a clearer view of where the price is going. All right, and you can see that I've employed my channel trend line on gold, okay, and this channel trend line is showing me how the gold is moving all the way up. So you need to understand reference points, okay, as part of your setup. All right, you need to understand other technical analysis, okay. There's so many technical analysis that you need to understand. All right, so what I'm now saying to you in essence, to simplify things, is you remember that we've talked about if we see the first buy in gold, okay, we're not going to be taking the first buy. We want to see the failure, okay, to make a new low before we can take the first buy. All right, before we can take the first buy. That is one part of the analysis based on where the weekly close, okay, based on where the weekly close. The weekly close so negative. Let me go back to you so that you can see it. You see that we close so negative. All right. We've analyzed the weekly chart. Now we are analyzing the daily chart. Okay. And on the daily chart, the first thing I employ on the daily chart, as you can see, is a channel or trend line. All right. So that I can see my support and resistance clearly. All right. And on that particular channel or trend line, I can see how we break, how we come back to retest, how that retest zone coincides with this particular area. Bear me a second, let's look for it. You can see this our data points here. All right. So that particular zone, the structural points, right, together with the channel trend line, okay, that's two key confirmation checklists. 1 second. I want to get my notes together. Let me bring them together, please. Bear with me a second so that we can have our notes together and then we can basically build on these notes. Okay. Daily. Because the notes are important for you going forward. I'll copy it into the chat room for you to have it as well. And if you want to take a screenshot, you can always take a screenshot. Okay. Got around, but thank you for the great insight. Love the training. Be back for more. No problems, Jake. It's good. It's good for you to get one single thing and get it right. Okay, then you can then go ahead and employ it on other whatever. Just before you go, let me give you the link to the so that you can watch that video. If you go on Google anyway and search for my name as Bolanle Balogun, all right, just before you go, you can go and watch the rest on YouTube. All right, Bolanle Balogun on YouTube. You can see all the videos that I've made right there. Okay. Sorry for everyone this time. Or let me check whether Jake is in the meeting. Yeah, I think it's gone. Well, we'll find a way to get it. All right, so going forward, for the people who have time to stay, where is my charts? Interesting, I've lost it. Right, I think we're doing gold. Right, sorry, ladies and gents. Going forward, looking at gold. Really, if I'm doing this on my own without explaining, it doesn't take so much time. But because you have to get people to understand the key reason behind what you're doing, yeah, you have to take time. I just don't want you to have an half education so that you don't understand what you're doing. All right, so going forward, we have the daily chart now. All right, so the daily chart is showing us that we have something coming up. We've seen the weekly, but we looking at the daily chart and we are seeing this Mr. Gentleman. Okay, this gentleman that we have over here is telling us a different story. All right, but the story that is telling us is there's exhaustion coming into play. Okay, there's no sell orders like that anymore. All right, and things are looking like as if it's gonna turn all the way up, and that is what is confirming to me that going forward, I do not want to take the first buy in gold when I look at that weekly chart. Okay, now when I'm looking at daily chart, it's telling me a slight different story. All right, I still do not want to take the first buy in gold, but notwithstanding with the daily, I'm now looking at things on a different perspective. I've seen this huge sell-off. Obviously, price needs to retrace. All right, and that retracement, this can be the beginning of the retracement all the way back up. All right, on that daily, as the daily has closed slightly positive with that green candle, that can be the beginning of that particular retracement that we are looking at. All right. So how do I treat this going forward? How do I treat this going forward? There are a couple of things that I will put into consideration. One of them will be my last weekly candle. Okay. And I'll look at the last four, 1, 2, 3, 4 as well. So this particular area for me on the weekly chart, this low right here is an important support for me. I'm going to change that color to my weekly color. I'm going to actually make it like this so that I can understand where I get that place from. I'll put my magnet on, all right, and I'll stick it right there. Okay, this is another important area for me on weekly, this low right here, because once we take out this low, then I know that we are going down. All right, so those two areas are the areas I'm going to be watching closely: 1281.01 and 1271.20 going into the new week. So on my daily chart now, I know that what I wanted to see is the first buy in gold, okay, that I do not want to participate in, all right. He has occurred because on the last few days we've tested 1276.50. We see close below it. All right, we're going to look into possibility of testing 1281.01. All right, so the first thing that we're going to be looking at is we want to see how we're going to test this monthly zone back again, because we've tested it and we will see that on the 4-hour chart. We've tested it, we've closed back below it. Price may go ahead and test it back up again, all right, and even try its best to see how best it can go above the previous day high. All right, so the previous day high will be key. That's what we're going to be looking at going into the new week. We want to see the rejection of that zone, and then if we see the rejection of that zone, then possibility of price to be going down, we follow through. But if we accept the previous day high such that price can move above it, all right, then we are looking for a test of the next day high, which is going to be over there. And then the maximum place that we are looking for, where we are looking for that key rejection, will be 1281.03. You can see how that literally line up with this base area of support. Right, so you can see some price coming up into this zone, all right, and then you are looking for rejection around there. You want to see your 30 minutes rejection candle. You want to see how this area is played, and this does not necessarily mean that it will happen on Monday or on Tuesday. This can be happening on Wednesday. You know, this area can find its rejection on Wednesday. A lot of movement can possibly happen, and then you are looking for this key zone. If, however, you find price going above this area, it's still, according to the weekly and according to the monthly chart, is still negative. That doesn't mean that the first buy, remember the first buy, if the first buy gets to here, then we encounter a particular sell-off, say for example, and that sell-off, we are looking for targets at 1276.50. We are looking for targets below 1271.20, but we'll be taking off our position 1276.50. It's a good area for us to take a little bit of profit. 1271.20 is another area for us to take profit. And then if price continues to go down, however, we know that, okay, the downtrend continues. But what we're now going to do is we're going to start to look at this from a very significant 4-hour trend point of view. So the next thing I'm going to put on this is another trend line, or a channel trend line, for us to follow what is currently happening in gold from this high to this high. So this is another daily channel, all right? And this daily channel is what gold is currently following. So I'm going to put that like this so that we can know where we are going on this particular gold price. All right. So on gold now, these are the two channels that we are following. It's either we start to follow this channel and break back above it, or we start to follow this channel and then continue to go all the way down. So we can see future possibilities of price going down that way. All right. And we can see future possibility of price going back up this way. All the top parts of the channel are good areas to find a sell, point, all right? Especially this is the best area that we could possibly encounter a sell point. So if we now decide to employ a couple of other things, let's go to 4-hour charts. This is what I'll be employing on 4-hour going forward. All right. So I can see my setup. I've finalized where my setup is going to be now, right? So my 4-hour will be the beginning of my trigger. All right. Let me bring those notes. Let me bring those notes forward quickly, please. Let me bring those notes forward quickly. All right. Daily. Let me get it to the 4-hour. I want you to have the notes so that I can carry on composing on it. All right. So now I'll be looking at the 4-hour charts. I'll be doing my detailed analysis into that. My setup is complete. Now I'm looking for an opportunity for a trigger. All right. So my trigger now, I'll be looking for my trigger on the 4-hour charts. Down here. Okay. So I'll be looking for my trigger on the 4-hour chart. Before I do that, let me look for my current targets on dailies, which are going to be the highs of dailies. I'm going to make that blue. I'm going to even make it like that, just to have an eye going forward. That's my perspective. And on 4-hour chart now, I'll be looking for triggers. So the first thing that I want to do on the 4-hour chart is simple as well. If you see following me, I will come down here. I want to employ a trend line. Okay. I want to employ a trend line on a 4-hour chart. Okay. So this is going to be my first trend line, which is going to be from that high to the second high, and price come all the way down like that. I want to be able to see if I can employ another trend line like this as well. Okay. All right. So when I'm looking at this now, just because I'm doing multi-time frame analysis from that high to that point right there to that third point right there, as you can see. So the smaller time frame now is giving me a different perspective. We've actually broken a 4-hour trend line on gold, okay? And that does not mean that all our analysis going down for gold to be negative, it's not valid anymore, all right? But what this is telling us is momentum is kind of shifting in a way, all right? So we are looking at price. There's possibility that gold price may go up, okay? If you are part of, if you've ever, is anyone here that is a member of IML before? I've got one of my good friends in IML that developed a particular strategy, the triple fire, the multi-fire strategy. If you're part of IML, you will know about that strategy. The triple fire, the multi-fire by Manny Queen Nonis. All right. Literally, Manny put out a strategy. That doesn't mean that that strategy might not have been in use before. You know, I mean, everybody knows about moving averages. Everybody knows about MACD. Everybody knows about stochastic. Everybody knows about awesome oscillator way prior before Manny puts them together. But I mean, to be deadly honest with you, Manny put up a great strategy together. this is where you can employ things like money strategy. I'll just call it money strategy, but obviously you know that those indicators have been there from time immemorial. If you are someone who love to still use indicator, because I don't like to just want to bring a trader into a new thing and just take away what they used to know. That's not the way that I trade. If you find value in what I'm teaching, right, then you can add it to whatever bag of tools, because I trade every single thing that is possible, and I try my best to not to complicate it as well. All right. But going forward, as you can see, we've literally broken our inner trend line on gold. We can now start to look for possibility of harmonics on this. But what I wanted to show you way before, and before we get to this 4-hour chart, is um, a lot of people know that I look into wave theories as well. All right. So before we even get to here, thank you so much, Rome. Is what I wanted to show you is this. I wanted to show you that in terms of trend, we've got a trend going down this way on gold before, right? Okay. All right. So if I'm going to be employing my wave theory onto this now, okay, what I can then say is, and we broke this daily trend line, right? We broke this daily trend line, okay? And breaking of this daily trend line begins a new uptrend for us, all right? So the beginning of a new uptrend starts from this low. 1 second. No problems. All right, so sorry about that. I'm gonna be looking at my wave theory and be taking my wave to understand what is going on here and know what part of the wave that we are on. So first of all, if you do not understand how to use Fibonacci tools, I guess this is where Fibonacci comes handy for you to be able to measure what is going on this particular chart. So the Fibonacci tool, however, if I'm looking at things, let me delete it first of all so that you can see how I employ it. All right. So we are the first break of the trend line over here, right? Which is glaring. I'll then employ my Fibonacci tool. I can start from anywhere really, just to start to do my investigation from high to low. Okay. Just to start to do my investigation and see how price is treating the highs and lows zone. All right. So what I can then see is I can see that from this high to low, just before we break this trend line. All right. Which obviously this is the beginning of the trend. We have a retracement back to, this is going to be 68.2. All I have to do is reverse this for me to know what the retracement is. Okay. So once I reverse it, right, I can see that we retrace back to 0.618. All right, so that is key for me, right? So the next thing that I want to do is if I extend this now to this eye, which is the eye of the break, from this low again to the eye of the break, okay? I want to see what kind of retracement that we are forming and where we are forming that retracement. So we have a retracement back down to 50%. Does that really does that really matter to me? Yes, it does. In fact, I can start from the beginning of the move that does the break, okay? And I can see that now we have another retracement back to a sweet spot of 76, 39 retracement level, all right? All right, so what I'm trying to deduce here is how are we actually forming the new trend, okay? So I can see some commonalities from the first high to low, retracement back to 61.8, that is key. All right, so this area now will become a zone for me. I'm going to be looking at this area as a zone. Okay, and this is going to be our analysis on gold going forward. We're going to be able to follow this analysis into the new week, into the next coming week. That's the reason why I choose a new chart. All the people that's following this will be able to get a screenshot of this. You'll be able to monitor it going forward. All right, and then you'll be able to see how gold is performing going forward based on this analysis. Once the wave get truncated, then we start to look at it from another particular view. So this is a zone for us. All right, the next zone that we are looking at is, by the time I now look at the break, exactly the time that we had that break, okay, from the low of the move, all right, that constituted the break down to here. All right, I can see that we literally come back to 50% retracement, which is good as well. All right, but our most key thing is when we come to 50% retracement, we want to see where our 2 to 3 is going to form, because the first wave would have been 1 from 0 to 1, all right, and then 1 to 2 down there after the break, all right. Always after the break will be key to us, all right. So then we now want to see where our 2 to 3 is going to be. That I can do it in 2 weeks. I can come to here and go to sorry, I want to do the settings on my Fibonacci and go to style. I can literally look for one particular what's it called over here that I'm not using, and then I can put minus 0.618, okay, on top of it, all right, and that, or I can literally come down here again, all right, and say I want to change the reverse. But what I want you to pay attention to is this: if I do it that way or I do it this way, it's still the same thing. So I'm going to put a little horizontal line on this, all right, so that we know that that is our area of let me bring it out for you to see the same area. You can employ your Fibonacci tool in all sorts of different kind of robust manner. All right. So what we are interested about is, can you see this 0.618? That's what we are interested about. Now, if I want to say settings and then I click reverse, that same area should be 1.618 for me. All right. All right. Can you now see it again that it is now the same 1.618, that same area, right? So whichever way you choose to use your Fibonacci, all I'm trying to say to you is you can be very robust in the way that you do things. You don't have to kill yourself and believe that just because you couldn't get it, stay there 1 second. My magnet tool is right. So the 1.618 is key. All right, and that is going to be where our 2 to 3 is going to last. So now if I decide to draw my Elliott waves, okay, if I decide to draw my wave, I'll now have, this is from 0 to 1, okay, and then this is from 1 to 2, okay, and then this is going to be my 2 to 3, okay. And one thing that you will understand is the 2 to 3, what we are looking for is now 3 to 4, okay? And a 3 to 4 has got to be one particular level, all right? And that's supposed to be 38.2 of our 2 to 3, all right? And then we're going to have our 4 to 5. So we want to find where our 2 to 3 is, because we haven't actually got that. And then we can employ our Fibonacci tool to find that. And how do we do that? Is by looking at wave 2, which is over here, right? And that's where we begin our Fibonacci from, all right? That's where we're going to start our Fibonacci from. So for gold, we're going to look at Fibonacci going forward from that to location, all right, to 3, location, okay, all right. So now that we have our Fibonacci tools from 2 to 3, what I'm saying over here, let me take off all this so that we don't start to see also different kind of tripling things going on. Left, right, and center. This is going to be my 3. And that 3, if you remember, my 3 is the 1.618 location, but you obviously just have to put it on the highs. All right, because this is literally giving us is giving us an Elliott wave, and then we are looking for this to base at 38.2. And my 38.2 is the same thing as 61.8. All I have to do is just again reverse this. All I have to do is reverse that. All right, and then it will come in at 38.2. So we expect our 3 to 4 to actually come down to 38.2. All right, but in this case, we did not actually get that 38.2. All this move over here for the Elliott wave to look into completion, we would be expecting it to come to 38.2. But what we actually get is something in the region of 23.6, all right, which price did not actually get there. So all our 2 to 3 now can be coming all the way up to this area, and then we are coming back now to test that 38.2 zone. All right. So what I now want to show you is some areas are now becoming important on this chart for me, and one of them will be if I take this to and I clone it, okay, and I come back down to this area of 38.2, all right, and I'm looking at price coming back down to that area, all right. And if you can come to think about it, this area now is corresponding to what that our channel is constituting to that our channel support. All right, so we can have a move that comes all the way down to here and is sitting at 38.2, and this area is a key zone for us again, for us to be looking at possibility of what price can do. All right, so we can see price coming back down here at 38.2, and the price coming down to 38.2 can be forming a key rejection level at 38.2. But what is key is that now means that our 3 to 4 will now be 2 to 3, sorry, will now be at this particular point. All right. So if we shift our 2 to 3 to that area, right, we will be looking for another 38.2, which is not going to be this key zone, which means we will now have to move our Fibonacci to where 3 is now, okay? And then at 38.2 will be this zone right now, okay? If we are considering the whole of this move as 2 to 3. And the only reason why we can consider the whole of this move as 2 to 3, if I come back down here, 1 second, is 2 to 3 actually need to fall in at at 3, which means at 3 need to fall in at 1.618 or 2.618. So if we take our Fibonacci tools from 1, which is the beginning, okay, back to from 0, which is the beginning, back to 1, all right. You remember the 1.618, that's supposed to be at 3, but at the same time, we can have at 3 at a value called 2.618 as well, okay. So if you look at my Fibonacci tool again, and I look at what I haven't used, 2.618. So we are looking for 2.618, and then we can reverse that, okay. So we can get our 3 at either 1.618 or 2.618. In either case, this 2 to 3 over here is still valid, all right. We did not actually get the 2 to 3 to 2.618, all right. And those are the kind of limitations that you can see on Elliott waves, all right. So you can either look at your 2 to 3 and say to yourself that you are looking for that particular retracement to 32 to or to 38.2 to complete your 2 to 3. All right. And what you will get is this. This is what I want you to see now. I want to literally come to here and take this and make it 2 to 3. Okay. I want to make sure that my Fibonacci is moved again from 2 to 3. Okay. And what I can do at the same time is I can hide quite a lot of things from us to be able to have a clean fib this time. So what I'll be doing is I'm going to be hiding a lot of things. We're going to come and unhide it as well so that you can see precisely what I'm trying to get at over here. All right. So trend lines, before trend lines, I want to add a channel. Let's say we add that channel. Will it be sensible? The horizontal line, will that be sensible? I just want to have a little bit of a clean chart, so I'll hide everything from here and see what we are getting, so that you can see my Elliott wave strategy in a clean and clear and concise manner. We can unhide everything back again. After we piece everything together, we unhide everything. All right. So what we are having now is possibility of having our 2 to 3 at this zone. Okay, and then looking for our 3 possibly here. Say for example, and then we have our 38.2, which is supposed to be our retracement for that 2 to 3. Somewhere around there. Okay. And one thing that you can now identify clearly is if that is 2 to 3 actually, price eventually did what? Get to that area of 38.2, all right? And that's more or less like a place whereby price kind of find the rejection, 38.2 zone to 50 zone, price find rejection, and things start to go all the way up. So if we put our 3 to 4 right here, that means if we are still going to get wave 5 on this particular chart, if we're still going to get wave 5 on this particular chart, all these formations that we are seeing over here can literally be price pattern for us that will break out eventually, all right, and give us wave 5. And that is where I'm going. But one key thing that is now becoming dangerous in essence is we've literally now come down below this 3 to 4, which means if we see going to be following Elliott's wave at 3 to 4, we would have shifted all the way now back to here. All right, so you can have a retracement back to a 50 as well, in as much as you haven't got a retracement back to 1. Okay, let me put this here, and this is complex. Okay, in as much as 1 is still holding like that, all right, and then you see have your everything in line, we can still get a push up for wave 5. All right, so what we've done over here is a projection. All right, this still hasn't complicated every other things that we've learned. All right, we just, as much as we are looking at price towards the downside rather now, yeah, as a trader, I do not want you to feel like as if just because I've given you that analysis, that's the only analysis that's there. Some other traders are actually looking at this and they're still looking for wave 5. All right. So in case that will break up, we haven't have a structural idea behind it. We know that each and every levels, all right, that we are closing above now, Each and every levels that we are closing above now can be the beginning of that move that can form wave 5 if we start to close above. All right, we've analyzed gold to the downside. Now we are analyzing it to the upside. Is that clear at all? No problems, room. Is that clear at all? So you can analyze gold in a way whereby you are looking at everything so bearish, and I can bring it back for you and you see, analyze it and looking at everything in a positive manner, because price can only do two things. Yeah, price can be looking to the north side, and price can be looking to the south side, and price can be doing nothing, which is either consolidation. All right. So bringing it together like this now, I've given you a full in-depth analysis on gold, both to the upside and to the downside, and you do not have to get lost when you see things start to unfold. All right. So now that we know that this can be looking at our 3 to 4, we do not get that 2.618 if this choose to be at 3 to 4, which means we gain the right necessary retracement that we need to get for 3 to 4, going back all the way down to 50, in as much as we are still above this, our 50 zone. All right, then things are still looking positive for this move as well, according to Elliot's wave. In as much as we are still above the 50, things are still looking positive, because you can see clearly that from this wave 2, let's put our Fibonacci down to the right place, which is going to be somewhere here. All right, and then we get our tree to the right place as well, which is going to be up here definitely. Can you see how we are piecing up everything together, and we are actually sitting on that 50? Okay, so now sitting on this 50 is key. This can literally be a massive push for price to start to create that wave 4 to 5. All right. Okay. So the market is never perfect. The market is never perfect. Okay. It's all about us now using our analytical skill. All right. And if we don't have it, all right, employ the service of someone who you can follow that can open your eyes to it in both manners. Do not be fixated to one particular direction when it comes to trading. Okay. We can analyze it going downwards now. If the market chooses to do another thing, we shouldn't get lost in the market. Okay. Let me see who I've got. So from Forex the Live to Fran, I don't know, is that Franca? To ITS Linda, to Jamin, to Kinap, to Linda C. Macon, to Maya, to Olugbemiga, to T Counts, to Thomas Meyer, to Winnie Chi, to Yeildu, to Deji Bob, to NP. All right. Thank you at the same time for being part of this. I don't know if it is boring at all, but for me, it's a passion. For you, I just want to understand and have a feedback on how you're feeling about this entirely, and whether this is opening up your third eye, your inner eye, to be able to see things much more clearly when it comes to analysis, and the reason why analysis is so important, so that you can be able to understand what kind of move you'll be getting in the market, and how things are going to be going forward. If it is clear to a certain extent, right? If it is not 100% clear, if it is clear to a certain extent, kindly just let me know, right? Thank you, Forex Delight, right? If it is, if it's something that you may consider in your analysis going forward, kindly let me know as well. If I mean, I do not say that you'll be able to get it immediately, okay? But I know that when you start to look at things like this, it will be much more clear, because at the end of the day, we can do it quickly, all right, and then we won't get anywhere. But what's the point in me giving you half education when I know that I can fully give you a full education? You know, yeah, I know it is clearly deeper than last week, and that is why the reason why I'm taking it deeper and deeper like this is I know some of you have been following me I know that I cannot give you the whole of everything one time. I don't want to get you lost. You know what I mean? But there will be a time whereby you too will become that leader. There will be a time whereby following my education will put you on that confident state whereby you'll be able to see it the way that I see it, whereby you'll be able to see it the way that. Thank you so much. I know, I know, I know. Thank you so much, ITS Linda. It is value, and I know that with this opportunity that we have right here, we can literally take on the world and change the world. And we haven't even finished. We haven't even finished. We just analyzing the daily, and then now you are having an in-depth understanding on how the price dynamics is going on with gold. You are looking at it yourself and say to yourself that, wow, probably if you've taken some trade in gold, you'll be saying to yourself that, wow, okay, wow, that would have been the way that you're going to be seeing it. But now that we are sitting on this 50, there are other things that pertains to this as well that I've seen from other strategy that make me to understand that this level that we are sitting on is key. Okay. Piecing it up together with an Elliott 2 is now even making it much more stronger. We can see a reverse of things going forward. But let's go back into thank you very much, T counts. Thank you. Let's go back into, because now when you're looking at your 2 to 3, you can be finding a complex retracement, and then you can be finding a simple retracement, like the kind of retracement that we actually have on this one. Yeah, I know. Don't worry. Thank God we are recording it. I don't know how long we've been on this for, but yeah. And Olugbenga won't just let me rest. No problem. Take your time to bounce. You'll find the rest on the recording. So we have a simple A, B, C retracement on 1 to 2. Then when you're looking at 3 to 4 now, it's going to be a complex retracement. That's the way that Elliott wave usually occurs. So we have to know what kind of retracement this is now giving us. So what we are seeing in essence is this. What kind of pattern do you think we are seeing over here? Right? So if we are looking at it, if we start to employ our trend line, even say, for example, we can see that we have a move like this. Okay, I'm going to make this a much more thicker. For everyone that has been part of this session, if you still want to share it in the room to let people know that we are on, I will appreciate that while I'm just doing the analysis going forward. Okay, although they will miss this could have been our a triangle going forward. All right, that triangle is broken now. In essence, all right, we can look for possibility of something else coming up. Okay, we can be seeing a situation like this. Let's look at possibility of any harmonic coming forward. If this is going to be a buy, I want to be looking for all my M's harmonic. Okay, I want to be looking for all my M's harmonic going forward if this is going to be a buy. So this is not actually an harmonic. Let me see clearly. Okay, my retracement is back at the same level, and this is not piecing up the D properly. Let me come down here. That's another support level. Probably even, sorry, this one. Okay, and then what I'll do is I want to take this up like this to that level. Okay, and then my retracement will be looking at this area, and then my C points will be looking at that area. There's a particular harmonic called Black Swan, but this one now at that particular retracement, let me see where the body is. Okay, so this is 87, the retracement that we're going to be looking for for that one will be the minimum of 1.27 to 141. If it's a butterfly, that's supposed to be at 87. But if it's a crab, then that will push us down to 1.618. Somewhere right there, right? So if this is a crab, crab can come all the way down to the wicks at that particular level. And then, well, this is so deep and deeper than anticipated for this particular zone. But what we can then do is we will hide this for now. We will now go on our 4-hourly charts to go and start to look for opportunities and patterns that this is giving us. All right, because this can be the beginning of another type of a wavy nature that we haven't actually seen before. So if we're going to analyze this takedown, what I'm now going to look at is A to B, B to C. I'm going to be looking for what kind of pattern is this giving me. All right, it's important for me to understand the patterns that I'm getting with this. In fact, this is a wedge, okay, and it's becoming much more clearer looking at it from a 4-hour point of. Let's see whether we have anything that can give us tree drive pattern, triangle pattern. Right, so we are looking at a falling wedge, all right, and a falling wedge is even a reversal pattern, and it can be a very bullish reversal pattern. All right, so let me use the triangle pattern. Guys, we've been doing this session, we didn't even remember to go for break. Is that how monstrous that we are? Wow. Okay. What I'm gonna do is it's 5 minutes past the hours of 7. Let's go for a little bit of a break. I'm sorry I've been holding you up. To be honest with you, I'm so sorry I've been holding you up. Let's go for a break. It will be good for every one of us to go for a break. If you want to come back to join me, should we do a 10 minutes or 15 minutes break? I'm so sorry I've been holding you up. I mean, I can't imagine. This is more or less like a cult. How can somebody just take up? No, this is not good. So let's go for, should we go for a 10 minutes break or 15-minute break? I'll leave that to you. Tell me whichever one you want to go for. If you can send it into the chat room if you want. Whichever one you vote for is the same one that I'm going to go for. I'm so sorry. Wow, this is unlike me. Can't even believe it. It's, oh, wow. No one is saying anything. You don't even know what break you want to. 10 minutes. Okay. Right. So someone says 10 minutes. I believe majority carry the vote. So we're going to go for a 10 minutes break. In the meantime, I'm going to put on a YouTube motivation for us to listen to. Wow, interesting. And not only that, I'm going to put on some few contact details in case someone um, wouldn't would be tired and feel like sleeping. Let's put in some few contact details so that if you want to be part of funding program, you can get to come here to find out. Um, right, so that is my Telegram. You can contact me on it. One of my Telegram. Um, the other one of my Telegram is this one that we literally blowing up. This one. It's another one. The mastery market. The YouTube channel. I believe you've got my YouTube channel. You can follow us on Instagram as well. Um, on Instagram. Follow us as the financial market trader. What I want you to do is I want you to get a lot of your friends. Sorry, let me do the Instagram again. I want you to get a lot of your friends. I want you to get a lot of your family. Someone that you know that you really want to do good for. Someone that you know that even your enemy, someone that will be bothering you all the time that, yeah, do for me, give me, give them this opportunity. This is trading education. I don't know for how long I'll be doing this for, but what I'm trying to do is I'm trying to build leaders. I'm trying to build um, people who will be able to take on the world. I'm trying to give out as much as I've learned over the last period of 12 years and 13 months. And you following me, you'll be able to see that this is quite different. This is not a 1 year experience. This is not even a 4 year experience. This is not even a 5 years experience. To be able to piece it together like that, it takes longer time and longer years to be able to take you to the market to the downside and bring you back up to the upside, to be able to let you have a full overview and be like a savior in full control of the market, and you can see certain points. And I haven't even given you enough tips that I really want to give you going forward. But notwithstanding, I know that trading education, you can bring a 13-year education into a 10 hours webinar or class, and that's why I kind of find it very difficult to say that, okay, I'm going to charge you for a 2 or 3 days course or 5 days course because I know this is ongoing. You know what I mean? But the best I can possibly do is, I know everyone will be going to church at the same time as well. Some of us over here, church time might be 12 o'clock. And I know that some people need to go to church. I factor that into consideration. Plus, I know that this is Easter period, and I know that a lot of people might not have time after church as well. That's the reason why I try to say to myself, let's do things for a couple of people from America as well, in Central America. Let them get to know about what we do over here. Let them get to understand about the opportunity, the funding opportunity as well for traders. Let them get to benefit. Let them get to spread the word all around, irrespective of whatever your educational background or your training background is. We can try our best to still provide funding for you so that you don't have to continue to take out of that your little salaries to contribute to a trading account. There's an in-depth, I don't know the reason why. All right, what I'm going to do is this. There's an in-depth um, risk management that is built into funding packages as well. We'll be able to share it to some of you. So if you have time in the next 10 minutes, which is going to be exactly 7:21, that's when we're going to begin the class again for people who has got time to continue. In the meantime, we try and blitz up all the other group for them to see that we are here, and then they can join us in. And Olugbemiga, whichever group that you want to send the info to, you can go ahead and send it to them, let them benefit. I know you have benefited a lot anyway. You make sure that you wake me up to date to make sure that we do this. Thank you for that as well. So motivation. Who do we want to listen to? Yeah, so
It's actually pretty easy to make money if you copy the kind of evil way that Instagram influencers are making money.
all right, I'm gonna get some drink. Thank you.
Sometimes horrible things happen to good people. Life isn't fair, and it can be heart-wrenching. And if you're having one of those dark days, it's okay. It's okay. It's okay to feel that darkness.
When challenges and issues come back to back to back to back, and it seems like something is after me, something is attacking me, something is attacking my journey. Look for the lesson in it all. You will grow through what you go through. The question is, are you willing to go through it?
When those bad things happen, what are you going to do? Are you going to let this horrible situation dictate the way you feel and the way you handle it? Are you going to fall over, fall down, fall apart? Or are you going to face this issue with courage and with resolution? You know darkness. So embrace that darkness. Don't look away from it. Own it. Step up to the challenge, no matter what you face. Start walking. Take that step. Every day, no matter what you are facing, get up and start walking. And never surrender. And remember that even in the most wretched times, when you face darkness yourself, no matter how bad things get, remember not to stop. Remember not to pause. Remember not to hesitate. Remember to put one foot in front of the other. Take that first step and start walking. And we will fight. And in fighting, we will win. And if not the battle, and if not the war, we will win because our spirit, it will never surrender. And that is the ultimate victory, to hold your head high, and even in the face of inescapable defeat, to stand and to fight. That is to win.
Don't allow yourself to switch off, but I know there's always an answer. No matter how dark that place may be, there's always a way out. Just gotta keep going.
Hold on to that fundamental quality of faith. Have faith that on the other side of your pain is something good.
My team and I always had trouble managing our tasks until one of my colleagues found Monday.com. Looking through the chat.
How do you lose 100 pounds? How do you run 100 miles? How do you? Let me tell you how. Stop asking these questions. It's how. You're delaying the process. How I did it, I wanted it. So my process was, as I'm asking questions, I'm running to lose weight. I'm figuring out how to do it. Most of us sit back and say, God, I wish I could do that. And we wait, and we wait, and we ask more questions, and ask more questions. I get it. You have to have knowledge. But I'm gonna tell you right now, man, how much damn knowledge do you need? You can go on the internet right now and figure out how to drop 5 pounds tomorrow. Everything is right there at your service. You don't want it bad enough. And that's why I can't connect it to you. That's why you hear the passion come out of me and you want to say it's anger. No, because I know it can be done. If you want it, you will achieve it. Get an idea, start walking and figure this out as you go. If you want it, you will find time in your life to do it. If you don't want it, you will continue to give me excuses. If you want it bad enough, you will figure out how to make this happen. You have to be willing to fail 100 times to succeed once. For me, failure was me having more information on how to succeed. And when you continue to move forward through hell and move forward past your fears and your insecurities and continue to push through this wall, your brain becomes really callous. And you're able to see things that most people can't even comprehend because you never ran from the fight. You ran to the fight. That journey is fucking hard if you choose your real journey. Then everybody just say, God, is it even worth it? Sure is, people. If I can make it to where I want to go, imagine when I look back on my damn life, how proud I will be. Go down that path. I guarantee you, if you finish that journey and you don't fear and waver and go places that are very easy, the other end of that journey is a peaceful end.
You can manage anything with Monday.com, even social media content. First, put all of your team's content ideas here, like how to light tweak your face. Then, put who's in charge of each post. Yeah, even that intern who's probably trying to steal your job. Select the channel and make sure it aligns with your target audience. Ha, your parents. You can upload files and work on the content with your team. Even your boss can contribute great ideas. Teams use Monday.com to manage anything. Banner requests, campaign tracking, ad production. So go to Monday.com and get started.
The first step before anybody else in the world believes it is you have to believe it. There's no reason to have a plan B because of distraction of plan A. If you can see it here and you have the courage to speak it, it will happen. See what I'm saying? We want to be at a dominating point, okay? So what we got to do is we got to get you thinking. We got to get you thinking like the dominators think. How do they act? How does Warren Buffett act? What does Warren Buffett do with his time all the time? Those are the people I study today. I don't study the people that I went to school with, teachers I went to school with. I don't even study my own family members.
Right.
I'm looking for people that are way up here that I can say, what do they do?
This motivation does not want to stop. And this is,
so I look to surround myself with people that can dominate, people that are certain. Okay.
Please bear with me. I've never seen anything like this before. This motivation really want you to hear it.
You don't surround yourself with other people. Here's what I mean. If 9 of your
All right. Okay. Well, and it still hasn't stopped. That's it. We're gonna, don't worry. I know it's a powerful speech. I know you want to get your mind right. We promise that, okay, now it has stopped. Okay. Yeah, it's all about mindsets, really. It's all about the way that we think. The one thing about trading is this is the reason why I put on all this motivation for us to listen to, okay? I don't want you to feel like as if it is hard, all right? How many people think trading is hard over here? Let's see. I've got Thomas Mayer, I've got Lugbemiga, I've got Maya, I've got Linda C, I've got Jamin, I've got ITS Linda, I've got Frank, All right. So what I want to do for the people that has remained on this call, if you are here, first of all, let me unmute every one of us in case you feel like having a conversation before we go forward. All right. Is there anything that is your challenge right about now, in terms of trading? Is there any particular thing that you are looking at that is a little bit difficult? I don't like to be using all those words. I like to be. Is there anything that is a challenge that needs to change? Is there anything you want to grow from? You can literally share with me. I can see how best I can help you. You know, I mean, I have managed to mentor a couple of people, and they have feel better. They are actually taking things to a next level, and that's one thing that is key when it comes to trading. You need to have a mentor, whether you like it or not, because your mentor is what will be able to see the mistakes that you are making clearly and be able to help you. Your mentor is someone who will be able to ask you that question and will be able to touch you at the right place and be able to guide you. You know, some of these things, it can be very challenging, but is there any particular thing that you are looking at trading right now that's a challenge to you? Talk to me. Let me know. If you can speak it out, say it into the chat room. I will go deep into it. I'll see how best I can help you. You know what I mean? And then things will start to change. It's all about shifting the paradigm in a way. If you can understand that, then things can start to change. So if you have anything that you want us to talk about, if there's any challenge of yours that you are looking at and you are finding it difficult, yeah, let's have a look at it. Then don't even be shy, because this is life. This is something that you want to own. This is something that the moment that you have possession of it, it's like the whole wide world is at your fingertip, you know, and you'll be able to do the best that you can possibly do in life with it. So I don't have a problem if there's any little thing, and this will be a lesson for others as well. This will be able to help others as well, you know. So if there's anything before I go forward into dissecting this triangle, don't hesitate to let me know, then we take it from there. Right, so in the event of still waiting for question, I'll wait for the question for the next 2 minutes, then I'll dissect this triangle, then we'll finish with gold and we look at other things as well. So if you have to think about it, if you have to write to me privately as well, obviously I can appreciate that. Don't hesitate to write to me at my email, and we can take things to a different level. Any question? Yeah, any question whatsoever. Anything that you are finding challenging in trading. And do you know the funniest part of everything? Let me just give you a brief view as well. So that whatever you are going through in life right about now, whatever you are going through in life right about now can be affecting your trading results. Whatever you are going through right about now can have a psychological effect on the way that you trade. Whatever you are going through in life, if your life is good, it can bring out a positive result. If your life is good the other way as well, it can bring out some kind of results. It can have an effect on it. You know, the way that you think, the way that you feel can have an effect on the way that you see your trading results. You know, the chart is not going to make you rich, okay? It's your emotions, it's your mentality that will make you rich. Is what you see in this chart or the way that you see it that will make you rich. That is not there to it doesn't even understand that we are looking at it right about now, you know. But knowing where to look at and how to look at things and how to see things, you know, you can miss anything to be deadly, or everything want you to miss them, you know. Every single thing want you to miss them. but depends on the way that you are now focused on what you want to look at, and now you're going to look at those things that you want to look at. That's the only way whereby you will find it difficult to miss things. All right, so I'm going to go forward and look into this triangle. I'm going to try my best to mute us back so that I can concentrate. I won't get diversion. If you have a reason to talk, don't hesitate to unmute yourself, and then yeah, let's talk. All right, so this is what we are looking at. We are looking at, in fact, a descending triangle, sort of. Let me take this way. Next level, this. Okay. If anybody choose to get other people in as well in their group, don't hesitate to do that. All right. So they move up, down, move up, down. So this kind of a triangle, we are seeing all our support and resistance zone. I'm gonna start it even in fact from here. Let's have a look. All right, and then I'm gonna push it up like this. All right, we remember we have and when you're looking at your 4-hour chart now, you can see that even the break of that particular trend line that we are looking at on the 4-hour chart, the break of that particular trend line that we are looking at, it's just a minute break. And one thing I want you to pay attention to is this. Look at how gold behave before it expand. Can you see this kind of behavior? Yeah. Can you see that kind of behavior? Can you see this kind of behavior at the same time? All right. So what I'm going to do is I want to do possibly, let's have a look at it like this. 1 second. Date and price ranges. Let's assume from here to here. I'm going to delete that again. Let me move it down. I'm going to take off the magnets. All right. I'm going to lock some. Let me clone this. Like this. You see that kind of a behavior, right? And then, so you have to understand what is going on, and you have to be looking for patterns. Can you see that we are still in that kind of behavior over here as well? All right. So can you see how we will congest up in one particular zone before we see an expansion? Congest, we see an expansion. Now we are congesting again. Does it mean that an expansion is coming? All right. We have almost the same behavior right here as well. Okay. Can you see that all those behaviors over here 34 bars, 7 days over here? Let me bring this closer. The shortest one 6 days. This one is in fact in 7 days, and this one well, currently we have what, 2 days. The shortest one of that type of behavior is 6 days, 7 days, 7 days. You see where I'm coming from? And this one is currently around 2 days or 3 days rather now. So we might be expecting consolidation around there again for how long? Can you see the reason why we have to be patient? It's giving us the clue beforehand. So we might be expecting that same kind of consolidation. It might take a couple of days before this actually unfold. So it's just some little things to watch out for. All right. So you don't just get in and start to say you want to buy, because you can see that the move can go up and start to come down again. And then before you know it, it takes you out. All right. But wait for it. Let's be patient with it. You know, it's good to be patient. It's one thing. That's one thing that takes everybody time to understand. Let's come to here and see what is this saying. Weekly recap: dollar denominated commodity pressured by. All right, let's quickly read this. So look at this. Weekly recap: dollar denominated commodities pressured by strengthening greenback. Okay, so in addition to the strengthening US dollar, gold was also pushed to near its lowest level, all right, since the end of December last week, as economic data from China improved enough to relax concern over a global economic slowdown. Yeah, enough to relax concern over a global economic slowdown, because Chinese data was positive. US West Texas Intermediate crude oil and international benchmark Brent crude oil futures looked tired all week, which could be the first sign of a top heavy market. Natural gas more. Let's see. Natural gas futures finished the week sharply lower after a government storage report showed a slightly larger than expected bill. Below average volume and the strengthening US dollar contributed to the relatively high volatility in a pair of dollar-denominated commodity markets, because the gold is denominated in dollars as well. The ones that we are looking at, gold and crude oil, while natural gas was pressured by a nearly triple-digit storage build, with more to follow over the near terms. Steady to better US economic data helped underpin the gold, but it was a weaker euro which fueled a spike to the upside by the US dollar index. All right. So over the last week, we realized that the dollar is steady based on its economical data. So this is fundamentals now, right? This is how you look at fundamentals. So you know that the dollar is steady. It's not moving seriously up yet, but it's strengthening. Okay. Also, the Chinese economy is moving, is improving. All right. Before, we are suffering from trade war. We are all thinking about trade war, but now things are looking a little bit better on the two countries that are causing this turmoil in the market. COMEX gold futures were pressured all week, all right, following through to the downside, following the sell-off. On April 11, beside the strengthening US dollar, which made dollar-denominated gold a less desirable asset. Nobody wants gold. That's why it's so cheap. Technical pressure also helped accelerate losses after the precious metal turned lower for the year. All right. So gold is getting cheaper, it's going down. That's what the news is going to be telling you. A lot of people are going to be reading into this news and they will be looking at cheaper gold. Okay. Last week, June COMEX gold settled at 12,760, down $19 or 1.48%. In addition to the strengthening US dollar, gold was also pushed to near its lowest level since the end of December last year. All right. Last week, as economic data from China improved enough to relax concern over global economic slowdown. Why would people be buying gold? People are going to be rushing to gold if they think the economic situation of the world or global economic situation is looking very weak. All right. So people want to have their assets in something that is secure. Gold is a safe haven, dampening fears of a potential global recession. Prompted traders to lift protective hedges in gold. You see that, and put their money to work in higher yielding assets. So traders are already taking money out of gold, knowing fully well that, well, anyway, we are looking better. Things are getting better. The trade war is looking dramatically improving. Among the reports driving down demand for safe haven gold were better than expected China GDP data, and China GDP data too is good, and improvement in the US trade balance and retail sales. Additionally, so people will be more than happy to invest in China. They will be more than happy to invest in United States rather now. Less bullish data from the Eurozone on Thursday drove down the euro while pushing up the US dollar index. So a lot of euro is dominated in the US dollar. So the dollar index is increasing, is strengthening, while the euro is literally weakening. This helped reduce demand for dollar denominated. This helped reduce demand for dollar denominated gold, and in as much as dollar is increasing in value, nobody will want to be buying gold because dollar is actually improving in value. All right, people prefer to hold dollar rather than holding gold. Well, that's what happened on dollar. You can read more on this. Let me copy and paste it to the chat group, and this is how you start to learn about fundamentals and get to understand more about fundamentals going forward. All right. So the other thing, right. So let's go back into our charts quickly. So we've seen where we are. We are looking for possibility of a push up. Everything according to fundamentals is telling us otherwise. Okay, that wouldn't mean that if it is cheap, it's not cheap. We're just going to be watching carefully, and we'll be looking for possibility of, should this turn up, where am I going to be? What kind of position am I going to be? And if this is going to turn down, all right, what is going to be our trading opportunity for it to turn down as well? So our trading opportunity for things to turn down is us looking at price like this. Let's see, are we on the 4-hour charts? Okay, yeah, so now back on the 4-hour charts. I'm going to delete this so that we can see certain things clearly. If you remember quite vividly how I have analyzed this for you, that price can eventually rise all the way back up to, there's a particular place, 2 places that we are looking at way earlier before. Oh yeah, I've hidden them. All right, so let me give you your trade setup for gold next week or this new week. Objects. Sorry. Hold on. Come on. So with ascending triangle, what you want to see first of all, just before I do that, is this triangle going to hold or not? So we can be seeing gold playing us up, yeah, and down inside this triangle. We're looking for 70% of this triangle. Let me see, before we actually get a breakout. We're going to be looking to get a breakout. Look at this. Okay, so we're looking for price to range, and this might be the place whereby we might be seeing the breakout, all right, to the downside. So gold can go up, come down, go up, come down, and I'm looking for possibility of price to either break to the upside, either break. Let me see if I can change the background of this. Settings. Right, so we might be looking for gold to do a thing like this, where is it? You can see a shoot up in gold, right? Bounce up, back down, yeah, shoot up, and we can see a move out like that. Okay, at the same time, let me end that like that. Come on. At the same time, it can be a possibility of a move down like this as well. Okay. All right. So if we manage to get a break of this based on the kind of data that we are getting on fundamentals, right about now, we'll be looking for gold to come and sit down on this particular area for support. All right. And then we'll be looking for the retracement or back to that particular triangle portion. That means we've broken out of this triangle. All right. Right now we're still sitting in the triangle, which is good. It can be running consolidation for a very long time. Gold is not going to be looking attractive in the next coming few weeks. Okay. Don't pressure yourself because you can see things yourself. You've read it yourself. Don't pressure yourself. And this is the best time for you to have taken this analysis until we have a break above this triangle. All right, you don't really want to do anything with gold, really. All right, to be honest, come to think of it, you can be chasing this. There's nothing wrong in that. You can be chasing the is there about how many pips is this? You can be chasing the $19. You can be chasing the you can be chasing the $5. You can be chasing it all the way down to, let's say, $9. Yeah. All this little thing that can possibly be happening. All right. But if you really want to be part of a trend, you want to actually break out of this triangle either way. All right. You want to actually break out of this triangle either way. All right. And the only way that you can be part of a big move down is when you break out of this triangle. All right. And then we see a retest of it, and that retest of it held. All right. With a rejection candle whatsoever around there. All right. So you want to see the break clearly for you to know that, okay, you can start to take things down. And even while you start to take things down, then you want to be careful knowing where you're going to take it down to. All right. You want to be careful knowing where you're going to take it down to. So this particular one is going to sit down at this 50 zone. All right. That's where that is going to sit down. Let's look for possibility of structure. Let's take all this out. Control Z. Let's look for possibility of structure if there's any in this zone. As you can see, going backward, you can see this is a break of support, retest back, quite a couple of bounce. All right. So we have even a retest in all these zones is important, and that's where we are even sitting right now. So we can expect a bounce in that zone, and that bounce can be a buying coming into gold and price pushing higher, and this is where price is going to push to and then possibly bounce back down. So we are sitting in a triangle right now, and this triangle is a form of contraction. Okay, it's a form of contraction, and price can continue to be contracting for some time. All right, so this is the kind of contraction that we are sitting at. The triangle best describe it anyway, because you can see more clearly in the triangle the way that is going down. So that is my idea on gold. I want to see the break, to continue to follow the economical fundamentals that we are seeing all the way down, or I want to see that gold can find itself in this particular scenario, all right, break of that as well and start to push itself all the way up. Okay. I can't remember where we get this popular from and how important it is in analysis. I couldn't remember, but it looks like a structure, an important structure to me as well. Let's see whether I can find it on monthly. I can't find the importance of that line for now. Right. So going forward, ladies and gentlemen, give me like 2-3 minutes. I just want to use the loo. I'll be back in a couple of minutes. And please send in the charts that you want us to look at next. I've given you the breakdown of gold. Send in the chart that you want us to look at next. Then I'll come and work. Right. So in order to put things in writing quickly, let's finalize our strategy development. All right. So the setup in this case, let me put it into writing for you and copy and paste it into the chat room so that we don't. I'm looking for the other one. Wow. Probably I've hidden it as well. Yeah, I guess it's much I've hidden it. All right. So I'll bring everything back up so that we can have a clear picture of gold. It's objects. Right. So the butterfly can now start to be playing its own thing going forward. We've done a lot of things into this. Wow. Okay. All our analysis back on. If it's gonna be mad, I'm still gonna take it back off anyway. If just for me to have a clear view. So quite a lot of things has gone into this. Now we can see the possibility of gold going down. It's looking bearish based on what we are seeing on monthly. Other things that we develop on Elliott's wave as well can have a meaningful sense. Now I want to write up on the strategy and then give you what the setup is so that you can understand, you can make use of it, give you what the trigger is going to be, the execution and the management is going to be. And then we finalize on gold, and this can be a standard 3 to 4 hours strategy presentation class for you. All right. What I want to do is this. Okay, I can delete this. You know the usefulness of this already. So I want to delete that so that we can see things clearly. All right. So where gold is sitting right now is at the base of a triangle. Okay, and it's sitting on 50%, which is 3 to 4 zone. Okay, I'll show you some other things as well. So the setup, well, let's use the other one because that one. So what is our setup? So setup in this case, one is monthly, weekly, say 4 previous monthly, weekly, daily, high and low zone. Okay, trigger. Our trigger now will be, we want to see the break of the triangle or the 4-hour triangle of the 4-hour triangle of the 3 to 4 linear wave. Okay, all right. So, and what is our execution going to be? So I don't want to buy gold until we move up above this triangle and break it and retest it. Okay, break execution is going to be break and retest of the 4-hour triangle to the top side by break and retest of the 4-hour triangle to the bottom side sell. All right, so you want to actually see the break, all right, and you see the retest. That is your execution, all right. So which means this trade is not something that you want to jump into. You have an in-depth analysis of not to jump into it. Execution is, so trigger means, let me be clear on the trigger. Trigger means the moment you see the break of this triangle, that is your trigger, right? And then execution means retest of that particular triangle to just show us that we respect that triangle and time to go up. As trigger is when you see the break of the triangle to the downside or upside, and then execution is a retest, all right? And then you want to start to take the trade down. So it's a thing whereby you're going to be patient for you to make profits in this break of the 4-hour triangle of the 3 to 4 Elliott wave. All right, execution is now you retest of the 4-hour triangle. That's one trade scenario that we can get into this of the 4-hour triangle. Okay. After the break upside for the continuation of the fifth wave, or other scenario will be test after the break at the break the side of angle in a truncated wave 4 to 5. Right? So now you know that your execution can be to the buy side and your execution can be to the sell side, or shorts. Let's say shorts of the retest, and then I'll say long here, retest. Okay. Then your management now will be your stop. Obviously, you want your stop to be above this retest zone, and then you want your stop to be below this retest zone. So either way, you can even put your stop above the rectangle, and then you can put your stop below the above the triangle, and you can put your stop below the triangle. Management with the stops will be below the triangle for longs. Okay, which means your stop is going to be looking to be towards the buy will be looking at 1284.07. Okay, long at around 1284.07, 1284.07 after break and retest. Yeah, and you want to short, you're actually shorting 1271.20. You're short in execution short. Web 71.20. Let me do this, do this, do this. Do this. Sorry, let's see. And then we do this as well. Shout out to my amazing wife and partner. She's been doing a lot of job to make sure that our group goes as well. Oh well, yeah, we're gonna analyze another chart. Thank you for just joining me. What can we do, Olubenga, now? You will start to teach them again, over and over again. If you're there, let's see. Yeah, you see there. Wow, that's my veteran. That guy is not leaving me to go nowhere. We test. Don't worry, we analyze another chart. Today we are doing what does a strategy involves. All right, what does a strategy involves? So we come up with a stem. We come up with execution. This is what you want to see in your strategy. We're taking things to a professional level right about now. Enough of all the will be below the triangles for long and above for shots. All right. Okay. So we've looked at two scenarios on a longer time frame. Now, and this is a longer term opportunity. For scalping opportunity, all right, for scalping opportunity, no problems, Daniel. For scalping, we've been there from about 4:30 in the morning, you know. That's how long we've get started. So you are just joining and we can understand. Don't worry. For scalping opportunity, then we can start to look into our 4-hour charts. Maybe that's what I'm gonna do. I think a lot of people love scalping as well. Okay, so having said that, this is our strategy. I'm gonna copy and paste this into the chat room. Okay. Yeah, obviously stop. I'm gonna at the same time copy and paste this into, let's reduce this now. Okay. We've got money coming up as well, which is gonna be a bearish grab coming up right there, which we haven't even seen, but obviously we can get this harmony can play out. You know, this harmony can definitely play out. All right. Going forward, what I wanted to show you again on gold is I'm going to show you that briefly on MetaTrader so that you can see that we have to understand how to look into things. And then I'm going to employ a strategy of the moving average. I'm going to go on daily charts. Is it daily or weekly, or is it 4-hour chart? Let's see. Right. This is not doing it for me. Oh, this is not gold. This is silver. Sorry. Right. So this is what I want to show you. And there's another strategy on its own as well. So combining the EMA strategy together, if you haven't understand what the EMA strategy is, we can look into that. For gold as well, is if I look into weekly charts, okay, I can still see that all we are in this weekly chart is we are actually in a range. All right, we are in a range based on this particular strategy, and this is the eye of the range right here. Okay, and then I'll be looking at this eye as my resistance zone. Okay, I can move things down a little bit to cover this zone, this zone, this zone. Let me see if I move it down here. 1 second. All right, so I know that the past is covered, the present is covered. All right, and then down here now we'll be looking at our area of support. Okay, I'll be looking at area of support over here. And the thing about this particular strategy is the bodies is what really matter for this one. The week does not matter, okay? But the thing about it is just because price has now reached the middle of this zone, yeah, I'm not going to be looking to sell because the maximum opportunity that I can get from here is from here to here, and that's about 1,456 pips. All right, and we've done almost half of that already. Okay, so if we're going to be going down, we've done half of going down. But the thing about this particular strategy on the weekly charts that I can see is price is above the 36 EMA and the 200 EMA. All right, so the 200 EMA on any chart is an area where the buyers will come and defend their position if price has gone above it before and price is coming back to it. Right, so the buyers will be looking forward to defend their position. Look at it. Does it mean that they fail to come in to defend their excuse me, sorry about that. Does it mean that they fail to come in to defend their position over here? No, they still come in, all right? But the selling pressure is so magnificent. Over here, they come in to defend their position and they are able to push it up higher. Look at there. Over there, they come in to defend their position. They failed at the highs and price was able to push down. So there are also different kind of scenario that can happen in this place. I've just printed it out. And then what EMAs have you on the chart? All right. So the EMAs on this chart is the same regular EMAs, right, that we've always been using, and they are the EMAs of 4 EMAs, 36 EMAs, and sorry, we are using 4 EMAs. First of all is 12 exponential moving average, right? The second one is we can do this on trading view as well. 1 second. If you have trading view, we can look at this on trading view as well. Let me look for gold. XAU. I think a lot of people use trading view. Sorry, XAU USD. Let's look at the trading view of Forex.com. Okay, so this is Forex.com trading view. I've got the EMA set on this already. Okay, so I can look into, let me look at this settings. Let's say we want to do something funny, background black. Okay, do I like grid? Vertical and horizontal grid. I'll say I don't really like grid. I'll keep it black. Okay. Grid in this case, horizontal grid, will it be sensible? 1280. Probably I can leave the horizontal grid for me to watch my support and resistance. Well, I don't have to. And I can say to myself, I want to go to daily. And this particular daily chart, the funny thing is you won't see the 200 because I've messed it up. All right, so the 200 over here now is going to be, instead of it to be black, I'm going to put it as white so that you can get to see it. Okay. So now you can see the 200-day moving average. Then you can see the 200-day moving average. You can see the 633 moving average. Okay, these are the moving averages: 12, 36, 200, and 633 moving averages. Okay, those are the moving averages. I hope you are able to copy that. 12, 36, 200 moving averages, and 633, and all of them are exponential moving average. Off to church, would miss this, no problems. Right, it's okay, it's all recorded. You can go back to it. God answer our prayers. in everything that we do, God first. All right, borders. I'm gonna make my borders to be, let's say, weak. I'm gonna make my weak to be black. Sorry, to be white. All right, so I've got a white weak borders. Should I make them black? And then black. This is them. So let's look at this now. Okay, I guess my borders, I'm gonna make it white because the background is white. Okay, background is black. All right, so it's kind of making a little bit more sense now. So looking at this on the daily, let's look at it on weekly to start with. First of all, is this okay now? The same thing that we're looking at MetaTrader, because we can now get to the candlestick. However, right, it's going to be Aiki and Nashi. All right, it's going to be Aiki and Nashi. If you are good with this, obviously you know that the blue is going up, the red is coming down. All right. So based on this particular strategy, I may decide now to take off the grid if I want, because it might be hindering my horizontal support and resistance zone. Let me say I want to take off the grid. Grid, 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 grid. Right, so I'm gonna make that black. Okay, so we have a naked chart, which is good. So the EMAs are there, 12, 36, 263. Okay. The first thing first is where is my resistance? My resistance is going to be here, right? I want to make sure that that resistance is money color. So each and every time we're getting there, just know that. Boom, boom, boom. Right. So that's our resistance right there. Then our next support is going to be down here as well. Everything on weekly, right over there. So we got touches there. We've got touches here, we've got touches here, we've got some couple of touches there. So what I'm trying to say in essence is this: we have managed to go above all this resistance zone, come back below it, back the wicks does. I mean, the body swap matters over here. The wick, we can look at it and put a horizontal line through it. All right. So with this particular strategy, the setup is the 36 EMA is our retracement zone, okay? The 12 EMA acts more or less like volatility. What we want to see is we want to see price above the 12 EMA for us to know that we are in a uptrend, okay? For us to know that we are in an uptrend, the price have to be above the 12 EMA, okay? And then being above the 12 EMA now, it shows us that we are in a uptrend. The moment price comes back and close below the 12 EMA, that shows us that our trend line for the uptrend is broken. All right, so you can use your EMA to as a trend line, and then you know that the uptrend is broken. We're not going to be looking at this chart as an uptrend anymore. We're going to be looking at it as price has broken the uptrend and price is looking to come down. But before price goes down, it's going to have to get to an area of where it can bounce back up as well. And that area is the area of 36 EMA, and 200 EMA is meant to defend the bullish orders. If the bulls really want to take this forward, they'll be looking at this 200 EMA and be bouncing away from it. But that tends to work better when the price is in a trendy mode. As you can see over here, you can see that gold is in a messed up situation. It's not trending whatsoever. None. It's not trending. We are in consolidation. So we are better off to be selling the highs more than anything else and be buying at the low. All right. So the best place to buy this gold right now is not even here at all. Okay. It's about buying at the low. All right. But having said that, let's go to daily. So on daily, however, what we can see is this. Now we can employ couple of tools. As usual, on daily we can employ a tool called trend line. Okay, right. And the problem with my trend line is instead of it to be black, I want it to be white. All right, because this time around the background is not white. Right, so this is our trend line. Let me make it fancy. I want something looking fancy. Okay, so this is our trend line. You can see multiple torches in all these areas of trend line. You can see how the data point on this trend line is kind of making sense right now. When we touch this, we bounce back down. Sorry. Why is your trend line not touching the edges of the wick? Wow. I tell you that when it comes to this strategy on Ike and Ashi, the wick is not of our concern. All right. So now I'm exposing you to also different kind of strategy. There's no right or wrong way to trade. There's also different kind of strategy that you can employ. I want you to understand how to use the strategy. In this particular case, for this particular strategy, the wick is not of our concern. All right. We override the wicks on this particular strategy. We've been looking at strategy development. We've looked at the one that the week is of our concern. Now we are looking at another strategy that the week is not of our concern. All right. We are interested in the body, right? We are interested in the body. So it's shifting. So that is important for this strategy. Look at it. Right? And then look at it. And then look at it. Right. So what is the question? Cannot hear you very well. Can you please write the EMS here in the chat, please? I just understood. All right. So if you look up here, can you see up here? You can see the 12 EMA, 36 EMA, 200 EMA, 633 EMA. Okay. Those are your EMAs right there. Okay. Those are your EMAs right there. All right. You're welcome. Right. So we've got a couple of data points on this trend line. This trend line has been respected times and times without number. You can see it yourself now. Okay. Now, what do you think will happen? Now we are back at that trend line again. Wow. Okay. Now that we are back at that trend line, what do you think will happen? Right. So based on what we've done on earlier waves, this is our 3 to 4 waves, and then we are sitting on a 50% retracement. Well, so now it's looking like as if it's gonna go back up, but we need to see that it actually do that. We are sitting on a trend line. It's looking like as if it's gonna go back up. Now we need to see it doing that. So we go back to our what? Our 4-hour trend line, our 4-hour charts. Okay, so now that we're sitting on the 4-hour charts, what we're going to be looking for is simple. Okay, we can decide to adjust our trend line again on 4-hour to bring this into perspective. We look, we see body to the line weak. It's not a problem, but we are sitting on a massive trend line. All right, and this is a weekly. Was that a weekly or a daily chart? Sorry, that's the daily chart, right? Yeah, that's the daily trend line. Okay, that's where we're sitting on. But we cannot forget that we are coming from this eye. All right, so coming from this eye, the next thing that you want to employ is simple. Is you want to look at that's another trend line right there. Okay, so bodies, week. So this, we're going to be looking for a bounce strategy. All right, and what is a bounce strategy? A bounce strategy is when you are approaching a technical zone or a technical area, and then price is literally going to be looking for a way to bounce away from it. Okay, so what you want to see, what you literally want to see, you see all the way that things are coming down so red. Okay, and then we have this little blue, then we have this red. Now we want to see a mixture of many red and blue in this particular location. Okay, we want to see a mixture of different reds and blue in this particular location, and that will be telling us that, okay, we are actually sitting down on a consolidated zone. We're going to be consolidating. We're going to be watching that consolidation closely, and what we want to see eventually is possibility of price to bounce away from this zone. Okay, price to bounce away from this trend line zone. Okay, and then start to go all the way up. All right, so we're going to be looking at this low as our stop region, which is underneath the trend line. We want to see how price is going to bounce away from here. So there's a rule to this. Okay, by going into the 1 hour chart, we'll be looking at possibility of I'm going to give you the rules as well to it and how to trade this. All right, so our key thing when you look at, let's go back to daily quickly. We've got the cross of blue against the red. All right, that is showing us that the trend is down. Okay, we've got our price coming down to an area where price is going to be defended. All right, that means all the sell orders are now selling into the hands of the buyers. All right, the buyers need to step into this price and buy this fearlessly, and then try to take the price up higher. Rather, now after this massive drop, you can see that in gold you have the drop, then you have the push back again, drop, push, drop, push. Now we are dropping. Okay, the next thing we're going to be expecting is push back up again, and we are not just dropping, we are dropping to an area of resistance, we are dropping to an area of 200-day moving average. We have a couple of things around there that we are looking into. So we are looking at 1 day, we are looking at 4 days as well. 4 days too remains bearish. We've literally closed below the 633 EMA, right? Closing below the 633 EMAs, and it's a zone that it's going to be telling me that we are now moving into an oversold territory. Okay, moving into an oversold territory is key, because this is where we can start to get buyers coming in. All right, so the trend is still looking down. There's no doubt about that. The blue cross is still there. The 200 EMA is still there. We are only bouncing off the trend line on this 4-hour chart. Meanwhile, on daily, we are bouncing off the trend line, and then we are bouncing off that 60 EMA. All right, let's quickly look at 2 hours. So everything still look the same, downtrend. All right, so let's look at 1 hour. 1 hour now is what is key for me. All right, 1 hour is very key for me. So what you're going to be looking at your 1 hour is the trend down. Okay, and then now you're going to be looking at possibility of a sign of a cross of this EMA to the upside. All right, so you're going to be looking at possibility of a cross of this EMA to the upside. You can see that we saw this sell-off, retracement, sell-off again, retracement back to the 36 EMA, and 36 EMA is always a retracement zone that would send the price and back down. So let's look at them. 30-minute charts. All we are looking for is proper cross of the 12 EMA. Have we seen that? Not yet. Okay, and then once we get the cross, I will, yeah, so on 30 minutes, look at the 1 hour briefly. 1 hour, we haven't seen the cross up, right? On 30 minutes, so things are still looking bearish on 1 hour. On 30 minutes, we actually encounter our first cross, okay? And then price is coming down below it. So every single thing that's happening over here is currently of no direction immediately. Although we started to see the buyers coming in, we've seen the first cross on 30 minutes. And after the first cross on 30 minutes, what you're actually going to be looking for is possibility of a trend line break now, all right? You're going to be looking for possibility of a trend line break. So if you bring your trend line from high to low, and then you bring it down there, all right? So you're going to be looking for possibility of a trend line break. So that will be a key thing. So we can look for it on 15 minutes, okay? And then we can look for it on 5 minutes. And this is what we're going to look for. We're going to look for price, not just hitting the trend line and bouncing off it, bounce off it, bounce off. We're going to look at our candle doing a thing like this. This is what we are looking for in the market. We're actually looking for a price that is going to do like this. Give me a second. Right, so we are waiting for the break of this trend line, okay? Right, so we'll be looking at this as 1 to 2, okay? We'll be looking at this as 1 to 2, all right? And that our 1 to 2, we want to see it coming down to give us a 2 to 3. So our 2 to 3 can be right on the picture at 2 to 3. So we've seen a break of this trend line. Is key for us to see the break of the trend line for us to start to drive this up. Then after the break of the trend line, so this is going to be at 0 to 1, 1 to 2, okay? Then the next thing we want to see is we want to see the continuation to the upside. All right, so out of this row, the first thing out of the setup is the break of the trend line, which we haven't seen. So we're going to wait for the break of this trend line to the upside, all right? And after the break of the trend line, we're looking for retracement back down, and I'll show you where to look for that, all right? It's just that the first particular time frame that breaks the trend line that I see was 30 minutes. Now I want to look for it on 15 minutes. I haven't seen the break yet as well, all right? So things are still looking weak. So I'll take my time to look for it on 5 minutes, okay? So, and all I'm looking for is a break of this particular trend line, all right? And then I'm looking for possibility of price coming back to retest the area of the trend line, okay? And then, all right, so we need to see clear break of the trend line, first of all. And then when we are seeing the clear break of the trend line, we need to be seeing our EMAs now. We need to be seeing our EMA crossing up at the same time. Look at what we are seeing over here. So let me do this quickly for us. So the blue now, I want to make my blue thicker like that so that we can see it. And then the orange now, I want to make it thicker at the same time so that we can see it, and click OK. All right. I wonder why this. All right. So sorry, let me go back to 30 minutes. I'm going to delete this for now, and I'm going to go to 5 minutes. Okay. So on this 5-minute chart, as you can see, the blue is now crossing back above the orange, okay? And the blue is crossing not just above the orange, it's crossing the 200-day moving average, all right? So in this zone, this is the zone to avoid trading, all right? This is the zone to avoid trading. Once you see the closeness of the 200-day EMA and the 36 and the 12 EMA, even in fact, if all of them are closing together with the 603 EMA, all right, this is a big volatility zone for me. What does that mean? This is a big zone whereby I'll be seeing choppy market condition. All right, price will be moving up and moving down, moving up and moving down, and it's going to be very choppy. All right, so what we're going to be waiting for is we're going to be waiting for complete break out of all these zones. We want to see price showing us that it's either going to be completely breaking to the upside. Yeah, we want to see a clear definition of this EMA to go on like this. Let me show you. If it's going to be going on to the upside, I'll show you what we are looking for. Let's see whether we can get it somewhere else. That's going to be an uptrend. All right, so even if we can't get it from somewhere else immediately, I can draw it. All right, so I want to see the 12 EMA moving up like that as the blue. And then I want to see my orange EMA as well. I want to see my 100 EMA widen. Oh, sorry. In this case, 100. I want to see my 36 EMA widening out as well. Oh, so what am I using? Trend line. I want to use something that is round in nature. Or look at what I've done. Okay. Yeah. So I want to see this like this. And this is going to be blue. This is going to be thick. All right. And then I want to see, let me clone this. Clone. I want to see this in orange. So 12, 36, both of them giving me a wide gap. Every one of them has sincerely crossed above all the 200 or the 30 or the 633. Now they've left them behind. They will be coming down below them, and then these are actually pointing up in a wide manner like this. I do not want to trade when every one of them is closer together. This is going to lead to serious loss in your trading experience when you see the 12, the 36, the 200, every one of them getting closer together like this. You want to have patience. And if you remember on earlier waves, when I was showing you that congestion zone, and then we said it has done 2 days and 20 hours, that it's likely going to take about 7 days before we actually see that expansion. You can see that this strategy as well has started to do something like that. So you need clarity to actually see this develop and then materialize. So in essence, this is what I'm trying to say to you. You remember when they are together, look at 236 EMA. So you want to see the breakouts, all right? Once you see the breakouts, and you can see how the 12 EMA break away from the 200, the 36 EMA, break away from the 200. All you are looking for after you've seen that break is a retracement. All right. So look at the retracement back to 200 EMA and look at the sell-off. Okay. Look at it there again and let me know if it's becoming much more clearer. So all of them are together. All right. So you want to avoid this. You want to see the break first of all. All right. And then you want to see the retracement. All right. You want to see the retracement back to 200 EMA and then it's time to short. Okay. And each and every time that you have seen the squeezing up together of those EMA, and then you actually are able to wait. This is your 1 to 3. Let me now draw it for you. So this is your 1 to 2, okay? And in this case, all right, I even love this. This is the reason why I come in. So this is what you're going to be using, and now you're going to be using it. So this is going to be your 1 to 2, okay? And this is going to be your 2 to 3. All right. And how do you manage that? Let's have a look at this quickly. Sorry. Is this color okay? Or we should get another color? Yeah, just because it tallies with that, it's kind of make me squirmish. All right. Okay. Even this. All right. So you want to see from the squeezing together of the EMA, some of these things are visualization. You want to see the breakout, and after you're seeing the breakout, you're seeing the 12 EMA and the 36 EMA separating out away from it, okay? And then you kind of see the retracement back to 200 EMA. That is the beginning of you feeling good and happy and be like, wow, okay, very interesting. What you are now looking for is you want to have your, from the break, which is the high to the low, all right? And then for the whole of the retracement, the high to the low will be your 1 to 2. For the whole of the retracement, that will be your 2 to 3, okay? So once you retrace, and remember now that we've taken this down to a 5-minute chart, all right? So we're going to go and look at how we're going to deal with this. With this strategy, is there need to use Fibonacci? Well, now if you want to use Fibonacci, you can use Fibonacci, all right? But for me, if Fibonacci is a little bit complex, right? We've done a Fibonacci strategy. Now we are looking into an EMA strategy. If you want to use Fibonacci, you can use Fibonacci. Let's employ Fibonacci and see what we are working with, all right? And you'll be looking for it at your key levels as well, and you will see how it's going to be working with Fibonacci. So you can see that that retracement is back to 61.8% rather than, it's not the 38.2, it's going to be 61.8%. Okay. So if you're now combining your 200 EMA with 61.8%, you are having a strong, massive area of rejection. All right. And then that can now be your sell. But let me show you what you are looking for to now get into the trade. I've taught Annette this before. Is Annette in class? Let's see whether Annette is there. Right, so Annette is not in. Yeah, but we've done a class on this before as well, and it's powerful. So if you want to combine it with Fibonacci to get extra level of confirmation and to build a target, you can do that. But without combining it with Fibonacci, the strategy itself have everything built in. So the setup that you may be looking for, you can use this for currency, you can use this for anything. The setup that you're going to be looking for is going to be your, you can be looking for volatility squeeze, we call it here, volatility squeeze, whereby the 12 EMA, the 36 EMA, the 200 EMA, sometimes with the 633 EMA, all of them are combined together on a chart in the same particular zone. So you are waiting for the breakout. The breakout will show you the direction in which things will eventually go. Okay. So this will build in your patience for you and then give you the opportunity to be able to ride the right necessary trade. So the breakout will occur and then you now wait for the retracement. When you wait for the retracement, if you add on the Fibonacci to it, then you are doing good. The actual entry for this particular strategy, is you wait for the retracement, right? Then if the price has moved down like this, in which direction is your trade going to be? I need answers in the chat room. I want to see whether you are following me. The few little people that's remaining, I want to give you something special again today. I want to see whether you are following me. I want you to, when you start to build that account, you are able to do that. Let me know what direction you're going to take your trade. If you've seen a breakdown like that. Okay, no problems. I'm going to come back with it. Where are you lost? H for the rejection to the downside. Y for the reaction to the sun. Right. The question is, if you've seen volatility squeeze of both the 12 EMA, which is in blue, the 36 EMA is your orange, and the 200 EMA is your white, and all of them are merry-go-rounding. They are so close together like that, okay, in a volatility squeeze, all right? And then what you are waiting for is your break of everything in one particular direction. It can be a break to the upside. In this case, what kind of break do we have? Where did it break to? And when you are seeing that break, now you're going to be seeing that there's a widening angle between the 12 and the 36 EMA. The angle will be widening out, right? So you will see your clear, distinct breakdown first of all right? So after that clear, distinct breakout, look at what we are looking at and look at how long it will take, because I like when I teach you strategies, I like to give you a reason to have an understanding. So the squeeze, we start to see the squeeze, 12 EMA and 36 EMA, they are very close to one another, all right? This is one part of the strategy in the EMA strategy, but this is a part of the strategy that can make you the most money and gives you a little bit of patience. You just come, you look at your charts. Have you seen this volatility squeeze on this one? There's none. All right, I'm not going to bother myself too much on that because I'm waiting for a good move. All right, so the three of them or the four of them combined together, all right? So look at this. This literally start to break down here, right? And then you did not get your entry until here, all right? So you saw the breakdown from 9 o'clock. You didn't, on the 17th, you didn't get your entry until 1 o'clock, all right? So the breakdown occurs during the London session, okay? You did not get your entry until the New York session, all right? Because sometimes you get a fake breakout as well, and then the volatility will start to squeeze back up again. All right, so that's the reason why you want to see the real actual breakouts, okay? You want all of them, the three of them, to leave one another and separate with a widening angle, okay? Now you've seen the cross. This is your key thing that you need to see. You want to see the cross of the blue below the orange. That is showing you that, okay, we are now in a sell. Then the next thing you want to see is a retracement, okay? That retracement, so the cross, the move from here to here is going to be 1 to 2, all right? And then the move from 2 to here will be a move from 2 to 3, okay? And that move of 2 to 3, that is where you are looking for your entry. Your entry is on 2 to 3. So if you see a breakdown to the downside scenario or to the downward scenario, your next trade is going to be to the downward scenario as well, all right? But what you want to see is this. This is your entry. This is your entry or your execution. Your trigger will be a move back to 200 EMA in so many cases, all right? and then that move back to 200 EMA. Now you want to see the first red candle. Okay, you want to see the first red candle. Can you see this first red candle? That is your trigger. The first red candle is your trigger, and your execution now will be when you look at the low of this candle. What is the low of this candle? What is the low of this candle?
On
1276.95. That is the low of that candle. So your entry will be 1276.94. So you want to see price 1 pip below the low of your trigger candle. Okay? So your entry, we actually come in on this candle, which is going to be 1276 what? .94. That is your entry right there. Let me make this sticker. Let's change the color of this one to white. Right. So the low of this particular candle, which is the low that break the 2 to 3. 1 second. Please bear with me. Guys, I need to put something. I need to put this speaker on the charger. So the low of this particular red candle, and that particular red candle have to cross the 2 to 3. Remember that your 2 to 3 does not have to be exactly week to week. Okay, your 2 to 3 can cross the body as well. So once you see any of the red candle coming down, all right, and then it's a red candle in the direction of the previous break, that is your execution. All right, that is your trigger, and your execution is going to be 1 pip below it. Okay, 1 pip below it. So your stop, which is going to be your management now, can now be you doing this, looking for a trend line scenario again, all the way down, and your stop will always be above the trend line. Okay, your stop will always be above the trend line. That is going to be your stop, and then you'll be more than happy to be taking this down. All right, so what you will now do is, once you find your stop, remember your let me bring this back down to where it's going to make sense, which is going to be the low of that candle. Right. And the low of this candle is what? 1275.99. You can see that that is the low of that candle. The low of this candle is 1275.99. Okay. Bear me a second. Let me grab some water to drink. And then obviously the entry will now be 1 pip below the low. Your entry will be 1276. Let me get this right. Sorry. Good morning. 8:51. Yeah, we're gonna go. We still have time. It's gonna be 9:20, isn't it? Sorry. Wow. How am I gonna drive? $1275.98. That is gonna be the entry right there. Okay. The stop, however, is gonna be above the trend line, which is above here. You can put a couple of pips above the high in case price wants to test the high. Or you look for structures as well and just put it a little bit above there. So that is our stop. Okay. After the volatility squeeze, when you see that all they are closer together, you want to see breakout of the volatility squeeze. You want to see retracement back to 200 EMA in some cases. And then obviously this is what you are risking. You are risking about 20 pips. Okay, so your first target will be the same risk, which is going to be about 20 pips. So you would have attained your first target somewhere around there. Bear with me a second. 2005. Right, so that is your first target right there. Let's do it this way. So from this entry, your first target will be 1 to 1. Okay, so that's your first target right there. You take off half of your position if you're buying more of it, and then you leave the rest. Okay, you leave the rest and you keep trailing it with the trend line. All right, so you're gonna come out of this trade when you break back up the trend line. That's when you're gonna come out of this trade. See? Right, so we started this strategy from analyzing it from a higher time frame. Okay, it's gonna make sense for you to analyze it from a higher time frame to see direction. You can trade it on a 5 minutes time frame. To be honest, it doesn't really matter. You can trade it on a 5 minute time frame. It does not really matter, but you want to know where the direction is going. So the reason why I go back like that, so you exit at the break of the trend line. This is your exit right here. So remember, you would have attained your first, if you want to exit manually, you would have attained your first target profit. Okay, if you like, you can now move stop to break even. Okay, you can move your stop to break even, which means you move your stop to over here. And if you move your stop to break even, obviously that means if you do not take if you do not take your position at the break of a trend line, which is the key place where you're supposed to take off your position, if you see price breaking back through the trend line, if you're someone who have time to sit down and watch, okay, so obviously you will get taken out even at your stop out level. All right, you get taken out at your stop out level. All right, so now this is now what I'm trying to show you, that now we are going through that volatility squeeze again. Okay, we want to see the break of price either to the upside, okay, or we want to see it either to the downside. Well, depends on how you want to approach it. If you want to trade this on a higher time frame, right, you can trade it on a higher time frame using the same specific scenario that I'm discussing with you, and we can look for it. Okay, but I know that it's going to be much more easier to find on a smaller time frame. All right, but if we want to look for it on a 1 hour time frame, I like it on a 1 hour time frame, on a 4 hour time frame, and 15 minutes time frame. And because this is gold anyway, we might be struggling to look for such an opportunity. All right, so in this case for gold, this is where we are having the volatility squeeze. Everything is closer together, but because it's a 1 hour time frame, it can be very difficult to find our entry. All right, it can be difficult to find our entry, especially in gold. But yeah, as you suggested, if you want to use it for day trading on a 5 minute chart, obviously there's nothing that stops you from doing it like that. We break this down from a higher time frame before we get to the 5 minute time frame. I was just looking at an opportunity that's happened previously to use as an example so that you can have a clear view and have a clear understanding of what I was explaining here. And now, 1 second, please. Okay. All right. So your trend line break is an exit, and then obviously all this madness is happening, and all this madness is another type of volatility squid that we are actually waiting to see the break. All right. So if you remember the other time when I said to you that when you can get a fake breakout. All right, you can get a fake breakout. So these are the type of the fake breakout that you will see if you do not wait patiently to see that the 12 EMA and the 36 EMA cross fully well down, okay, before you see the retracement. Remember, this trend line is there. This trend line is even on a much more higher time frame, and you can be using this to take the trend line bounces as well, trend line bounce trade as well. But yeah, there's a lot that goes into this trading strategy. That is just one part of it that I've managed to explain to you. All right. The next part of it, I think we'll be doing it on the next classes. Don't forget you have your support and resistance that you have to take note as well. That's another part of the strategy. It's very important. You have to know how to make use of your support and resistance. Once you see price approaching support, you draw all your support and resistance. And once you see price approaching support, instead of you to be thinking of selling, right? If you start to sell, instead of you to be thinking of selling, you are actually thinking of taking profit, and you are actually waiting to see whether the support is going to be broken, retested, and price will start to go back down. All right. So it's just a part of the strategy that I'm able to explain to you guys today. And I'm going to be calling it a day here for now. All right. Because I need to go out soon. I need to go and have a shower. And obviously, we will be able to continue with this strategy. If you love it, if you like this strategy, yeah, let me know. Just type 111 into the chat room. If it's something that's going to be easy for newbies rather than harmonics alone, then I'll be able to teach it again. Probably what we're going to be doing is we're going to dedicate one day to be teaching this strategy, dedicate another day to be teaching Elliott wave, so that we don't mix things together. So we teach the EMA strategies, which is this one. I'll teach you all the tricks and all the tips and tricks with it, because this all you need to do is just to be able to visualize. Then obviously we can learn from it. What we've done today is we've actually combined this. We've actually combine harmonic with this today, all right, so that we can see, because you miss that harmonic, right, you wouldn't really because you miss the Elliott waves with harmonic, you wouldn't really know how far we've come. So I can't blame you, all right. But yeah, if you are listening to this for the first time, you can use everything in combination and be able to see things clearly. We know fully well why gold is sitting here about now, using the wave theory already, and then we can see that okay, where it's sitting is around 3 to 4 wave, and then there's possibility that things can break out. But for now, until we actually see that breakout, which obviously this strategy is letting us see that okay, if that breakout is going to occur, we can monitor it on this strategy as well, and then wait for the retracement and take it all the way back up if it's going to go up. But for now, it's not yet ready. It is glaring that it's not yet ready. So yeah, and we'll be looking into harmonics on some days. We'll be looking into EMA on some other days as well. Ladies and gentlemen, thank you so much for your time. I really do appreciate your effort. I wouldn't know if there's any newbie here today. For all the newbies, I'll try and make this recording available as soon as possible. This is a little bit advanced anyway. This is all about building a strategy. The setup in this particular scenario is that volatility squeeze. The trigger, however, is when we have that break of this volatility squeeze, and then we have a 1 to 2, and then 2 to 3, right? The break of the 2 to 3 is the break after we see the sincere breakdown, all right, of 1 to 2, and then we have the retracement, which is going to be 2 to 3. The break of this 2 to 3 trend line, all right, the break of this 2 to 3 trend line is, is our trigger. I like this strategy because the setup, the trigger can easily be defined as well. So my trigger is going to be the break, the candle that breaks this 2 to 3 that I've drawn. All right. And then my execution is going to be 1 pip below that particular candle. All right. My execution is going to be 1 pip below the candle. Which is the 1275.98, and then my target profit will be 1 to 1 of the risk. My risk is going to be above this particular trend line, and you can see how price will be respecting the trend line. That's what I love about this strategy. Each and every time when price comes back to the trend line, right, it's an opportunity for me to take another sell position. Each and every time when price comes to the trend line, if price break the trend line now, right, I would have now known that it's time for me to get out. Okay, so price come back to the trend line. Look at it. This trend line has been holding. It's held right here. One, it's held over here again. 2, the same trend line held over here again. 3, and then the same trend line held over here again. 4, all right. And then on that particular fourth hold, there is opportunity to sell again. You know that this is your trend line. Stop goes above the trend line. You can literally just know that you are selling into support. You have to be careful selling into support because you know that you want to be taking your profit off the table as quick as possible. You can never anticipate or predict the break of this support. You see where I'm coming from, and then obviously when the support break and price was staying a little bit below it, hanging down below it, and we are anticipating extra break, we then tend to find that we only crack the little minor support, and then price went significantly up at this particular point in time. Anyway, this is the EMA strategy going forward. We will look deep into it. For some of you, it's the first time that you're seeing it. You can combine it with harmonic, and then see the possibility of it helping you in your trading decision as well. So with this particular one now, I'm looking at a butterfly or so. I'm going to be looking at this at 127. All right. So I can see this 5 minutes butterfly forming. All right. I can now combine this with my harmonic. I can know that I have an opportunity coming up over here. I can literally say to myself, 1 second, let's look for it. Where's target profit? I don't have it on this one. Right, so let's say settings. I want to take off some few things. So I'm gonna have my stop. My stop is gonna be this 38.2 and take out all these ones. 38.2, 61.8, this, all this for now, and then that as well. And I want to save this template as target profit. Save. Right, so for my harmonic, I know quite fully well that I'm looking for an entry right somewhere around there for a buy in case this is gonna come down, and then I'll have my target profit on 31.82 and then 61.8, the first TP and the second TP. So I can combine things together with this opportunity as well. It just depends on how robust you want to take things. Anyway, ladies and gentlemen, yeah, I like it with the Ike and Nashi. Yeah, I like it with the Ike and Nashi. Anyway, yeah, you enjoy the best part of all the training. You stay all through, and I hope it's value for you. I hope it's something that you will be able to take away from me and start teaching us in the class as well, and start drawing your setup. I managed to put a lot of effort into this, and I hope you all is going to be able to watch the recording and enjoy it from the beginning as well. So I'm going to call it a day now. Thank you so much, Daniel Iba, as always. Kwakuhan Anim, thank you so much, Linda Simakon. Thank you so much, Maya. Where's Maya from again? Let's see. I think I've got Denzel is gone. Maya is from Scotland. Wow. Okay. Thank you. And Odusanya Ibokun. Thank you so much, and Olugbemiga. I hope you are blessed with this knowledge. I hope it's gonna take you to places. I hope it's gonna help us to conquer the world. I hope it's gonna be a source of um strength to us to be able to help other people as well. All right, so I'll say you have a good day. Thank you for your time. I will try and post this into the onto the YouTube channel. So I'm gonna stop share now. If you have any question, don't hesitate to let me copy the contact details for you. If you have any question, our YouTube channel, and then the email. So just before I go, in case you want to copy it again, okay, so, and then the other thing that I'm gonna do is I'm literally gonna, okay, so we got it right here. So yeah, go on, ask your question just before I go. I want to copy this. Right. Okay. So in terms of broker to use, well, you have to use a broker that offers a low spread. All right. I use IC markets. There's a particular broker that are trying to be in talk with me currently. I will let you to know the name of the broker when I finalize talk with them, and then if it's good as well, I'll let you know. But yeah, for now, IC market, and obviously we can take that to another level. All right. So for all the people that managed to join in today, I will see you soon. I gotta go now. Have a lovely day. Thanks, guys. Let's see. I've never used hot forex before. All right, I've heard a lot of complaint about hot forex. I don't know, but I haven't used hot forex before. I've seen that IC market pay me on time; they don't delay, so I use IC market. You're welcome. I'll see you later on, guys. Bye for now.